And we are live. Thanks everybody for tuning in to day 2 of Binance Blockchain Week. The future is now. My name's Sarah and with me is my co-host Kat, and we have got a jam-packed event planned for you. So let's get on to it. Over to you, Kat, to take us through what we have on today.
Sounds good. Thank you, Sarah. Well, today's theme is on the future of finance, and we'll be covering the intersection of blockchain technology, crypto, and finance. So this past year has been a big one when it comes to crypto adoption, and everybody around us at Binance, it seems like every day our friends and family are asking us, how do I buy Bitcoin or where do I buy crypto?
Oh, I know, right? These past few months have been fascinating in the crypto ecosystem. And later we have an AMA session with CZ. So do send us your questions on Twitter at Binance using the hashtag Binance Blockchain Week. So Kat, what else do we have planned for today?
So this afternoon, we'll also be joined by Anthony Pompliano in a much anticipated Fireside chat. Then we have a series of keynotes and panels where you get to know and explore the latest trading trends with professional traders, get an inside look at what blockchain analytics reveal about Bitcoin adoption and the state of the crypto market, and much more. But that's all coming up next. First, big thanks to our sponsors Dodo, Frontier, Chromia, EasyFi.network, Amazon Web Services, Stratis, Scale Network, and Ocean Protocol. Also, a big shout out to Binance Angels who are helping us today to moderate the chat. Thank you so much. So now let's get started with the first panel of the day.
Absolutely, and thank you to our angels. So it's our pleasure to welcome Davi Wan, founding partner at Primitive Ventures, who'll be serving as the moderator today. So over to you, Davi.
Hey guys, welcome to the Binance Blockchain Weekly event. So I'm Davi Wan, so I'm co-founder of Primitive Ventures, and we are a global crypto asset holding company. And here we have my panelists. So Caroline from Alameda Research, Ricky from Autonomy, Eric from Injective Capital, and Vince from Binance. And what about we have a quick round of self-introduction and to our audience. So we can start from Caroline.
Hi, yeah, I'm Caroline. I'm a trader at Alameda Research. I've been working here for about 3 years now. Before that, I was trading at Jane Street for a couple of years.
Ricky?
Oh, hi guys, this is Ricky. I'm a co-founder of Autonomy. We are a cryptocurrency trading firm. We pretty much trade everything that's actually there is in crypto.
Eric?
Hey guys, this is Eric. I'm the co-founder of Injective Protocol, a layer 2 decentralized derivatives exchange. We unlock the full potential of borderless DeFi by supporting derivatives and futures.
Vince?
Hey guys, I'm Vince. I run the global institutional business here at Binance and also VIP coverage. Great to meet everyone. Thank you for joining.
Cool. Yeah, I think we have a really good coverage from both the trader side and then also the exchange side, both centralized exchange as well as DEX. And so the first question I want to ask everybody going to be, what do you see the trader profile? And so especially in our cryptocurrency industry, and what are the specific target users that you guys are serving to? And how does it differ comparing with the traditional stock markets? Because Caroline has been working on the TradFi before, has been working on Jane Street, right? And I think both Ricky and Vince has a traditional finance background as well. Yeah, so just want to hear everybody's thoughts on what are the specific characteristics that crypto traders, so what's the composition of the crypto traders specifically? I think we can start from Caroline.
Yeah, I guess I'd say like one difference with traditional finance is simply that exchanges in traditional finance really aren't catering to users in the same way that crypto exchanges are. People just have much less choice about which exchanges they're trading on. So if anything, they sort of like more user-focused things are like brokerages, things like Robinhood. That's kind of like where you see the innovation and the user focus in traditional finance. But yeah, I mean, besides that, I think like crypto traders are, I don't know, maybe not that different from say like Robinhood traders or something, but I think there's like a lot more diversity and they're a lot more global. So probably just a bigger group.
Yeah. So what about Ricky?
Yeah, I mean, in terms of like customers we serve, I don't think it's actually that much different. We still serve like as a time, we still serve like institutional, or we'll call it crypto institutional players, which operates pretty much the same way, voice brokerage, with a GUI. In terms of traders that are, at Autonomy or the ones that we work closely, I do see a lot of the old folks that actually in my old world of commodities trading and my old world of X trading that still operates the same way, talk the same language. So yeah, it just would trade different assets.
So like, do you see any like difference in like risk profile? Just like crypto traders are more, yeah.
Yeah. That absolutely right. So yeah, I can say that it's pretty much, there's no, I would say, designated risk managers because of those regulations, like Basel, other kind of rules for capital requirements in crypto anymore. It's all everybody operates like a prop shop, and you're up to your own risk controls. So that actually gives traders a lot more room to leverage up, right? As high as 100x, or even sometimes for options is even more than that.
Yep. Eric?
Yeah, I would say the access to different types of instruments, the diversity of it, crypto is definitely not even close to TradFi. But I think the more interesting part of just in general for crypto is just ease of access for a lot of these relatively more inaccessible instruments. For example, stuff you would find only on like IBKR instead of general brokerages. Those are being made a lot easily available for retail investors and just in general, more risk-loving traders. And I think that's an interesting kind of difference between crypto and traditional finance. Another really interesting profile is that within DeFi, it's a strange mix, essentially. Like there's a lot, it's very developer focused. And obviously, whenever you engage in any type of DeFi protocol, the smart contract security is baked into any type of return profile. So that's certainly an interesting dichotomy between the DeFi subsector of users compared to the greater crypto ecosystem.
Yep. And yeah, what about Vince? And because Vince, I think you're also serving like both the institutional and like VIP customers, and like you can also see a lot of like data on Binance, because Binance for many of these like first impression, so for many of these like newcomers and all consider Binance as a like retail oriented exchanges, but like it seems like you're also seeing like institutional users like flowing into Binance as well, right?
Yeah, that's a great question and a great point. So first of all, as a cryptocurrency exchange, we're in a versus how do we compare to a traditional exchange, right? We're in a pretty interesting spot where a cryptocurrency exchange essentially acts as more of an ecosystem, right? And also takes on a lot of the functions that a traditional brokerage might offer, services that a brokerage may offer. So it's not just an exchange. But it allows us to essentially cut out the middleman and access directly. So a lot of our clients are direct end users, which means, as many others have commented, there are a lot of products that are specifically directed and targeted at the end user. And historically, that's just been more retail oriented and retail focused. So I think that's one of the major differences between us and a traditional exchange. Now, speaking a little bit about the institutional side, as you say, there's a lot of data, and we saw this really starting from the beginning of 2020, and we did recognize that there is an uptick of institutional users coming on board to the industry as a whole, but of course specifically to Binance as well. Institutional new institutional applications that basically one thing that we're looking at internally has basically increased every single quarter. Some statistics. I mean, in Q4 we saw a 36% increase in number of new institutional applications quarter over quarter, and the total number of institutions versus a year ago has gone up by about 70%, I'd say. So and the numbers are still increasing. So that is definitely a market that exchanges and just crypto industry players and service providers are getting ready to accommodate in service, and we're definitely we've been working very hard on that as well.
Yeah, cool. So I think all of us, we are working with or like working on exchanges to some extent, and exchange as a business like hasn't changed that much like probably ever since the Nasdaq and like NYSE when it comes to electronic exchange, and just wondering especially for the builders, especially for builders in our panelists, and most of our innovations around exchanges actually are not on the exchange itself, are more on what type of crypto assets that you are going to offer, and the specific token economics, and probably the process of asset issuance, right? And so what do you consider as the most ambitious innovation and the most novel what is the future novelty out there when it comes to the exchange? It can be infrastructure, it can be product offering, but what are the innovations that you are seeing right now around the exchange itself, but not the asset on the exchange? It can be for DEX or for so it can be for DEX, it can be for centralized exchange, and I think we can start from Vince this time.
Sure. So actually, I'd say in the Binance has been around for about 3.5 years. I'd say there's quite a number of innovations that have happened. The assets and the asset class does stay, but there's a lot that we've picked up and learned from the traditional markets. For example, futures and derivatives exchanges have been established. And on top of that, I think with the introduction of decentralized and DeFi markets, the AMMs that have come up, for example, on Binance, we have tried to pick up and integrate that with our own Binance Swap product, which, for instance, you're able to take advantage of the full AMM market dynamics, but at the same time, for a crypto newbie, for instance, who may not be so comfortable managing their own keys, they're able to trade that on the exchange. Another thing that's come up from a capital raising perspective is launch pool, right? This is something that, again, I'd say is something that we have learned from the collective and innovative mindset of the overall the general community. So there's a lot more that's coming up in this decentralized space. New innovations, I'd say, securitization and the compartmentalization of risk as more derivative and structural products come out in the decentralized space. That can be very, very interesting. Now, of course, this can also be very risky. There is a lot of good and interesting platforms that have come out very recently. I'd say there are a lot of very good ideas, but going forward, a lot more work needs to be put into it so that the details can be hashed out. And I think that's what the DeFi space is great for, and the whole crypto industry as a whole. It's just good for experimenting and trying out what the best solution is.
And yeah, what about Eric? And so you guys are working on something pretty novel out there. And yeah, so especially when it comes to layer 2 and like all that, and just curious on like what is the what is the most ambitious goal you guys have on the roadmap?
Yeah, so the main thing that we really focus on is basically building a generalized infrastructure. So we really kind of tinkered everything from ground up, building the entire decentralized order book infrastructure, building also the entire EVM layer on top of Cosmos, and scaling all the Ethereum transactions, making it compatible and composable with our own Cosmos layer. So those are pretty exciting within kind of like the isolated subsector of somewhat of an L2, somewhat of a Cosmos ecosystem development. I would say that doesn't have an extremely strong relevance to DeFi, but it does make everything that we're trying to build much more possible and much easier. So that's why like we created a lot of generalized with the futures protocol that we created on top of our generalized platform. We were able to support a wide range of derivatives. For example, yield derivatives that allows people to track the return of let's say depositing $1,000 into Wi-Fi USDT vault. Just in general, potentially, stock futures, forex futures, and a lot of different types of futures that are simply possible just because of how flexible our protocol is. I would say I would say that with this type of like higher throughput, faster settlement, and kind of like DeFi centric chain that we're building, and kind of paves the way for a lot of possibilities when it comes to even building options later on, even building kind of very extremely DeFi native protocols in general. So what we focus on is more on the infrastructure side, but I can definitely see a lot of different innovations happening on the financialization part of it, and also basically just how the collective mind can come with so many fascinating things every week. It's just beyond me.
Mm-hmm. Yeah, so like Ricky, so I know you are trading for the firm and also trading for many of the clients out there. And so when it comes to exchanges out there, and yeah, so like what is your like criteria for a good exchange? And then probably when it comes to exchange innovations, and what are the things that most excites you?
Mm-hmm. Well, obviously, Binance is our largest venue for liquidity. So I think I agree with Vince, right? I think there is a lot of innovations that are recently happening on Binance, like the launch pool. It's definitely one thing that we paid special attention to, and we do think that actually token coming out of that programs has some very good economics that we just we like work with certainty, right? By certainty, I mean the connectivity, the fund injection and withdrawal. It doesn't matter what kind of delay you may or may not have, but for us, if we know in advance, if there's a maintenance window, if actually there's going to be some delay, but let us know in advance, then we can manage those risks, and those are actually sort of like preferred quality. So in a lot of stuff that we do on the DeFi side, is actually surprisingly more actually to maybe contrary to a lot of other. Contrary to the common beliefs that we actually do a lot on the DeFi trades as well. A lot of the uncertainties we face is actually very undesirable. Major thing is that when you send an order out, you don't know whether or not it's actually going to be confirmed, right? That's actually one major, especially when the network is congested. But when we send an order to Binance, we most likely we know it's going to be there, and unless some extreme conditions happens. So I would say, comparable to that, there's still some improvements needs to be done in terms of the DeFi side. Yeah.
Yeah, Caroline. Hey, Carol. Like you're on mute.
Oh yeah. I think I agree with a lot of what people have said. I agree with Vince that I think there has been like a fair amount of innovation in the space over the last few years already. I'd say the things I'm most excited about in terms of exchange innovations are sort of just on the centralized exchange side, offering a lot more products. I'm excited about things like FTX's tokenized stocks and prediction markets, and just having crypto exchanges be not just crypto exchanges, but kind of exchanges where you can trade any product that you want to. I think on the DEX side, just kind of like scaling and sort of being able to support the same range of things that centralized exchanges currently do.
Yeah, I think we can take FTX as an example, because right now it has a lot of like different exotic product offerings out there. How you guys can actually ensure the liquidity for each type of products, and because like the more that you're offering and like the more distracted the more distracted when all the traders come into your platform, and so it can actually dilute the liquidity out there, right?
Mm-hmm. Yeah, it's definitely a lot of work. That's sort of I guess what Alameda is there for. I mean, like whenever FTX is thinking about listing a new product, generally like talk to us and make sure that we can like be there to provide liquidity on day one. Because I mean, these days, like on Bitcoin perps or something, FTX doesn't need us to provide liquidity, but for like some random new product we list, we're probably going to be the first people out there providing liquidity. And yeah, it is a lot of work, but I think it's worth it to be able to offer this array of products to users. I don't think it really sort of dilutes the liquidity in other products very much.
Yeah, got it. Cool. So we talk a lot about DEX, right? And so we have seen for 2020, and there's this explosion of all these decentralized exchanges, like for like both things like Uniswap, and that's more I consider as like a spot exchange, and then also the other derivative and many other derivatives and like synthetics, so like derivative and like synthetics asset offering, and also happening right now on the decentralized exchanges. And the volume, like we have seen, like the volume goes up quite a bit, but like for the mainstream, and I think there's a lot of like long way to go, like for the costs so from both the cost perspective and then also from usability perspective. And I think like we can start this question from Eric, because you're building for like all the potential DEXs in the future, right? And so would you consider the current top 3 bottlenecks that holding back DEXs users?
Yeah, I think obviously the number one cost, I guess bottlenecks that's going on is mainly with gas fees. Just in general, the cost of transaction, especially as there's more and more traction around these DEXs, it just gets prohibitively expensive. This is just by the nature of how Ethereum works and how I would say how it's going to look like for the foreseeable future. So that's definitely one of the biggest bottleneck out there. So some would actually argue, the block time and the slow finality would be a pretty giant one. But I would say that right now, like Ethereum's ongoing rate has gone down pretty nicely, and essentially you can almost certain that your transaction is going to be included for future transactions once your first block has been confirmed. So that major concern has been mainly alleviated. I would say the second biggest bottleneck, again, like going back to the old point, was speed. Basically, the trade turnover rate, the throughput issue. You just can't support that many trades out there going on. So you even right now, Uniswap, it is pretty much operating at a maximum capacity. And the only reason why the volume fluctuates from time to time, it's mainly because like the average volume per trade is going up. Essentially, people are really trying to squeeze in the order to guarantee inclusion. But that also means that the technically the transaction cost or the trading fee has also is also going to go up along with it. So eventually, after a certain point for these type of I guess like phenomenon is that it's more of a rich man's game rather than a platform for the general trader, because as more and more users come on board, the cost of transaction goes up. So it will no longer be worth it for anyone to trade on top of Ethereum unless you are working with like major sizes. Yeah. I would say the third biggest bottleneck would be it's hard to say, but some people do rip on Solidity and EVM quite a lot. I would say that right now it's just been cemented as such a strong standard that it's very difficult for us to decouple away from it. But obviously with EVM, with general smart contract model and Solidity, the language in and of itself, it'll create a lot of security hazard and a lot of potential for hacking that we've seen time and time again. I wouldn't blame it on the developer. I wouldn't blame it on all the market participants involving these protocols. I would just say that it is an unfortunate nature of being an open finance protocol, and it is a risk that traders have to really factor in whenever they engaged in these type of activities. Yeah, I would say that's why L2 is so exciting at the moment, because it does alleviate a lot of these issues. It probably doesn't alleviate point number 3, but for point number 1. Definitely, the throughput's a lot higher. There's no gas fee for most of the L2 solutions, or it has negligible gas fee. And the interesting part beyond that is just that you do lose that greater composability when you're engaging in L2. And at the moment, there's no perfect solution with it. We are working on atomic transaction to and from Ethereum, but that's going to be more of a kind of like an epic goal for us. I would say number 2, it comes with L2, and for number 3, I think it's just more on developer education over time.
Yeah. So, and I think for Ricky, and you have mentioned that like certainty is something that's most important to you, right? But when you guys trade on DEX, and there's a lot of issues of uncertainty, and also like front running as well, and so you might not be able to get the best price you want, right? And then also like slippage and all that. Yeah. So like, what is the biggest fear, or like, what do you consider as the biggest issue right now when you guys are trading on DEXs?
Yeah, it's like it's right now, right? Sending Ethereum transaction is like participating in a 10 seconds like Dutch auction every single time with a lot of uncertainty, right? Unless you have the infrastructure, go into the memory pool and try to outpace somebody. We try. It was a fun game, but in the end, everybody loses, right? We actually try that out. And then for us, it's not really a game that we want to be part of that, like pure DEX, like arbitrage trading, competing on speed, all of that. Because in the end, you do your math, it's a zero-sum game. We actually look at more trading on DEX as a way to still provide liquidity to the market. Like that's what we do the best, right? It doesn't really matter we trade on on Binance, provide liquidity for the tokens, or we trade on Balancer, Curve, or Uniswap. But I do see a lot of what I normally call the liquidity gap between centralized exchanges and DEXs, even right now when everybody is still on the Ethereum mainnet. But I agree with what Eric just mentioned, right? When L2 solutions comes in, which we believe in that. And the volume increases, but it's also gonna actually create a new sort of problem, which is segmented liquidity. In that case, your assets gonna be segmented, and your user is gonna be segmented, and you have to move assets around on the Ethereum network again. And then I think the liquidity gap is probably gonna get even worse right now when we solve transaction fee issue or speed issue. So for us, it's more like what we actually still look at the most important factor here is liquidity, and how do we bridge the liquidity gap, and the rest of the infrastructure or technology challenges, we'll try to overcome it. If we're not able to overcome it, we just limit our trade sizes or capital sizes just to adjust to it.
Yep. Yeah, and I think like the question for Vince here is, so when Binance launched its own DEXs, and also there's many other third-party DEXs building on the Binance Smart Chain right now, and like, but like there's still a huge gap, and when it comes to volume and like daily active users between all the DEXs and like the Binance main site, right? So what do you consider are like, so probably like if you have heard any like user feedbacks out there, and like what are their like biggest complaints like when it comes to DEXs, and like how you guys gonna fix that? Right.
So we've been, this is an interesting question. We've been thinking about obviously user adoption and user acquisition for basically the last 3.5 years. So we think about this problem a lot. And specifically for decentralized exchanges and decentralized systems, as Ricky and Eric mentioned before, the number one problem is gas. right now, Ethereum is the major network that everybody is using. Gas is just too high for retail adoption. As a percentage of their trade, it can be a significant amount at this point, right? So we do need to wait for new networks to be adopted. Systems like Injective, systems like Solana and Serum, or BSC and Binance DEX, where essentially this is version 2, more thought out, and it is more user friendly for retail adoption. The second point, I think, is it goes back to ease of use. A lot of DEXs can actually be quite difficult to get used to, or to get started for a new mainstream user who's coming to crypto for the first time. Not only do they have to find these sites first of all, right, and understand and get used to the UI, the layout. Even before that, they have to figure out how to set up their own wallet. Get on MetaMask, figure out how to store their keys. And that can be a very daunting process. So the way I see it is more education is required, and we do think that one way around it is to familiarize users first with. I mean, there's a whole not your keys, not your coins. Everybody talks about it, but at the same time, there is a very the risk of losing your key and losing all your assets can be a very scary thing, and it's a very real thing. So as a practice round, for instance, if people can get onto, they're used to online banking, so a centralized exchange will give them a similar user experience, I'd say, right, with a proper login. And once they're more familiar with trading and buying Bitcoin, then they can take that a step further, with the proper education, and move on to decentralized exchanges and access the additional liquidity there that is not always available on the venues. The final point, I think, is so again, for major mainstream adoption, people first have to get fiat into crypto. That right now is not readily available in the decentralized space indexes, largely because fiat institutions just currently don't jive very well with decentralized anonymous spaces. So I see that centralized exchanges like Binance, right, as again a gateway to bring in more traditional user adoption, which then can channel into the decentralized space as the next step.
Yep. Yeah. So what about Caroline? And yeah, so FTX. So are you also trading on DEXs as well, like as a trader?
Yeah, we do.
Yeah. Like, what do you think about this?
Yeah, I definitely agree with some of what other people have been saying. Yeah, they're expensive. They're slow. Yeah, I think other bottlenecks for us are sort of, I mean, like most of our, DEX trading is on AMM style exchanges, and we, much prefer providing liquidity on, exchanges with order books where we can cancel our orders if we if things move against us, things like that. Yeah, I think also margin is sort of a big constraint with us for DEXs. Just kind of moving collateral around takes a lot of work. There's, obviously platforms like Aave and Compound, but there's, nothing that's very kind of easy and composed like you see on centralized exchanges. So I think kind of, yeah, getting those is going to be important for DEX adoption. And then, I mean, probably the sort of speed and cost is sort of a basic bottleneck to all of those.
So like, do you see like just whales? Because I think right now, majority of the user profiles on DEXs are still like relatively smaller retail. like, do you see DEXs in the future can actually cater towards like larger institutional traders or like whales in general? Because it seems like for me that most of these like AMN style most of these like AMN style DEX is more like proof of capital, right? So like, because it's kind of like it's kind of like a dilemma out there. The cost is too high, and that can block a lot of like retail traders like outside. And but like when it comes to like whales and like institutional traders, and their impact on the whole pool gonna be huge, and so they probably not gonna going to get the ideal price that they want. So it's kind of interesting. So like this interesting conflict out there. And do you see there's a potential fix for this in the future? So probably layer 2, probably the other like design mechanism.
Yeah, I think like there are potential reasons that like large traders would prefer using DEXs over centralized exchanges. I mean, I think just the kind of like the decentralized trustless aspect is big, not having to rely on ultimately the decisions of the exchange as to what happens. I think also the sort of like composability aspect and the transparency adds a lot of cool things. I mean, for instance, we act as a market maker for some coins, but there's sort of like an element of trust there where like we make some kind of agreement if we're going to provide this amount of liquidity, and then they pay us to do that. Whereas DEXs, you can just do it much more straightforwardly by just kind of airdropping coins on like whoever is providing in your token. So I think like that kind of offers some potential reasons that people would prefer to be providing liquidity and trading on DEXs.
Yep, got it. Yeah, I think we can move on to the next section of our discussion here, and that's regulation. So over the history of our industry, it seems like starting from day one, and like exchanges, especially centralized exchanges, like have been wrestling with all different agencies and like regulators out there. And I know Binance and Alameda, FTX, and so you guys have a lot of experience on how to probably arbitrage around different jurisdictions and like things like that. And then like in the future, so like in the future, going to be interesting for how all the regulators can work on DEXs, because there's a lot of different risk exposures, but it's very hard to get hold on. So it's kind of hard to have a good framework around it, right? So I think the question for our panel is going to be, and what do you see the like what is the current biggest regulatory risk exposure to all the centralized exchanges, and then how to manage your risk exposure from like different jurisdictions, and then for like DEX operators, and especially for like the DEX infrastructure operators, and what is the current legal frameworks that you guys are following, or like if there's any legal frameworks out there? I think we can start from Eric.
Yeah, we essentially go by the same model that 0x and Uniswap is following. Essentially, you provide infrastructure, but you don't actually essentially act as a centralized gatekeeper or take on any type of centralized responsibility during the entire exchange process. So that's pretty standard, and that's kind of the playbook for how most DEXs are doing it. Although, like, understandably, a lot of these decentralized derivatives exchanges are utilizing, some sort of roll-up or going for a more centralized approach. It is a little bit more regulatory, really risky. But like, derivative just has such a high demand, and not everyone has time to build an entire chain for themselves.
Mm-hmm. Yeah. So probably for Vinci and like Caroline. So from centralized exchanges perspective, and like how you guys are trying to avoid all these potential risk exposures, and like given BitMEX and like many others has been like hammered down by regulators like last year. Vince, like, do you want to start?
Sure. So I'd say our industry is obviously very new and innovative. So inherently, the regulations and guidelines are evolving and progressing, and there's a lot of work under development. I think we pay very close attention to this, right? We work from our perspective, we work very closely with regulators and law enforcement to make sure that everything is compliant and we don't run afoul of any laws or regulations. What I can say is we do put a very strong emphasis on combating fraud and security issues. So there are a lot of measures. For example, we're working with on-chain analysis partners like CipherTrace, like with Dick, to make sure that we are tracking that no illicit funds are coming on an exchange. So we do look at, we do make sure that we know who our clients are. In short, as we work with regulators to make sure that everything is compliant, there is a lot of self-regulating on our side, and I'm pretty sure with the rest of the industry, to make sure that we do the right thing with the whether or not the regulations are ready. Just so that once the regulations are there, we can show that we are already compliant and we have actually been doing the right thing.
Yeah. And for like Caroline, and I remember when I first met Sam, that was in San Francisco, and Sam and I think the whole team originally from San Francisco, right? And 1 year later, and so he basically moved the whole team to Hong Kong, and I think that's a very good decision. So like looking back right now, and yeah, so how you guys how you guys can actually make sure everything is compliant, like especially you guys are keep innovating and keep pushing forward, like to the edge of the envelope and offering a lot of like different like products out there, like yeah. So like to many outsiders, like many of those are pretty risky move. So if you want to share anything as an insider, so like that would be great.
Yeah, I mean, I only have so much sort of visibility onto the FTX side, I guess. I mean, for Alameda, we have sort of less regulatory exposure, but we're kind of, moved to Hong Kong because that's where FTX and that's where Sam is as well. But yeah, I mean, I think it's true that like, as Vince was saying, the sort of like biggest general regulatory exposure for centralized exchanges is probably like AML, KYC stuff. And so just like, I think like taking that very seriously is important and something FTX has always done. And then as for the rest of it, yeah, I don't know, we have a lot of lawyers. We talk to them a lot. Sam is always on the phone with them, so.
Got it. Yeah, and I think like for Ricky, so the question is more gonna be when you guys are serving specific clients, right? And like how you guys can do a thorough like background check and just AML stuff like that, and it's kind of impossible because a lot of things that you just can't trace like to the root, right? And then how you can guys avoid that?
Yeah, I mean we follow. Again, right, legal expenses, that's one of the biggest headaches we face as well. And we do actually have like 2 or 3 different like third-party KYC vendor providers that actually help us go through the thorough list. But in general, it's more like whatever all banks as us, right? We definitely will ask our clients and go trace back into whatever source of income, social status, store search, and check on all the different terrorism funding databases, all of that, right? Basically make sure that we cover our own basis. And there are cases that many cases, especially more recently, we have to turn down actually quite a number of clients because of some of the names pops out as suspicious. It really depends on, I would say, a fair balance between serving the clients to the best of your capabilities and versus, just listen to your own compliance officer, right? Don't step on whatever responsibilities that we granted them. That's pretty much it. And we do have to file suspicious activities and voluntarily to, in this case, Singapore government, since we're actually under the Mars crypto license, sort of like the umbrella right now. That's pretty much sort of like so far as we can go. Yeah.
Cool. Yeah, I think we are running out of time, and yeah, it's a 45-minute section, so we're pretty much done. And all right. Yeah, thank you guys, and I will just hit stop recording, and I think we're all good. Thank you very much.
Thank you very much, Toby.
This planet is at a tipping point. The headlines seem to agree. It might be the only thing we can agree on. We seem to pattern, booms and busts, haves and have-nots. Pushed to the brink by COVID-19, we find ourselves more divided than ever. And despite staggering sums of money being printed, many continue to struggle. We simply can't afford to wait for the pattern to repeat itself. Today, people are choosing open platforms powered by blockchains, ensuring money flows through the hands of everyday people.
Institutional investors are getting engaged.
A new wave of global institutions are investing in Bitcoin and blockchain technology, while demand for cryptocurrencies has reached historic heights, forever changing the way we give to the causes we care about and how we exchange, earn, and spend. The future is decentralized. The world is moving forward. We're building new systems to increase the freedom of money for everyone. But it'll take all of us working together to push past the tipping point.
We have a Binance Smart Chain that's finally released, a $100 million fund for the Binance Smart Chain ecosystem community.
I think that Bitcoin is the solution to 7.8 billion people's problems. They just don't know it yet.
We can watch the world change, or we can change the world.
Without a doubt, crypto exchanges are the marketplace for the crypto ecosystem, and they have evolved so much over time. So a big shout out to all the creative developers and bitlers who are watching today.
Absolutely big shout out. And now we have the founder and CEO of Binance. Needs no introduction, CZ. And CZ is joining us for a live AMA session. So quick reminder, if you haven't sent in your questions yet, you can still tweet us at Binance and use the hashtag Binance Blockchain Week. Now, please welcome CZ.
Hello, guys. How are you guys doing? And thanks everyone for joining our event.
Awesome. Thank you so much for being here. So we want to start right off the AMA with an easy question. So can you tell us what's new and upcoming at Binance?
Yeah, sure. There's a number of new things happening right now. And I think we've been quite busy this year so far. We saw an all-time high yesterday. So BNB have reached above $50 US. And more than that, I tweeted we saw multiple matrices for all-time highs. So we also see all-time high in daily active users, daily registered users, and our daily registered users have broke the 2017 all-time high, and by a lot, by 75% or so. And this time it's sustained. So in 2017-18, we saw a peak and then it dropped off for 2 years, or 2 or 3 years, and now we're seeing back at those peaks again and sustained. So our system's under a lot of pressure. It's a good problem to have, but we are working very heavily on that. So far, our system actually have coped with the volatility and the exponential growth relatively okay. It's our customer support that's really struggling right now because we just can't scale customer support agents in the same way that we can scale systems. So the waiting queue is a little bit long. We are looking at other innovative ways to solve those problems, but we do ask for your patience and support as well as your understanding. There's a couple of new products I want to announce. So Launchpad, yesterday we announced a new Launchpad project, also in a new format. So with this format, is a lottery is a lottery subscription based on the amount of BNB people hold. So this puts a lot of additional incentives on BNB. And the new project is iSafPal, which Binance, for full disclosure, have invested. We are a minority investor in the project from 2 years ago. iSafPal was one of the incubation projects from Binance Labs like two years ago. The 3 other product updates I want to share, I'm really excited about. So Binance Card is still going really strong. I love using my Binance Card every day. We charge 0 processing fees, and you can get up to 8% cash back. So that's a lot, depending on if you can reach that tier. Our active users for Binance Card is growing really, really quickly. So especially growing at double-digit rates. It's very impressive. And right now, all of our European users can sign up for Binance Card through Binance.com. And we have more markets launching very soon. Yesterday, I heard that Swipe is going to launch USA pretty soon as well. So that's really exciting to hear. The second of 3 products I want to mention is Binance Lite. So right now, we launched a Lite mode in our app, and it's really geared towards what we call new users who may not be super active traders. So the Lite app is really easy to use, and it has a very good feedback from our community. And within the Lite app, we actually stress more entrances for fiat on-ramp, so fiat gateways, payment channels, bank channels, and also the P2P trading. So all of this are baked into the Lite version that should satisfy 90 to 90-something% of basic user requirements. So you can switch to Binance Lite app on your Binance app, both on iOS and Android. If you think some people complain that the Binance app is too complex, too many numbers. So that's the second one. The third one is what I'm really, really excited about. And this is going to be a major product going forward, I think. So we actually quietly launched the Binance Pay beta product last Friday. So that's 3 or 4 days ago. Some people will discover the feature, some people won't. Right now, it's relatively hidden in the product. You have to dig pretty deeply to find the feature. But Binance Pay is a basket product that we do plan to spend quite a lot of effort on in this year. We think that payments is one of the most obvious use cases for crypto. It hasn't really taken off yet because of various difficulties. One of the traditional most clear difficulty is if you go to a merchant directly, ask them to accept crypto, they're not going to accept crypto because maybe 1 in 1,000 people will use crypto to pay right now. That's the general adoption percentage for crypto. And without the user demand, the merchants are not gonna accept it. But now we have different solutions in place where the merchants can continue to accept fiat or at least fiat-backed stable coins. So this way, their costs and their business doesn't have to fluctuate with crypto, and the users can pay in crypto directly. this allows users to stay completely in crypto. Binance Card is one of the projects in Binance Pay, and we have just launched a app-to-app payment prototype already. It's live. If you can find it on the product, you can try it. And so I believe very strongly that with Binance Pay, we can actually allow much more people to stay 100% in crypto. So I'm really excited about that. And we have a relatively large team pushing that forward. So this is really pushing the dream of leaving crypto. So yeah, I mean, if you don't see it, you probably should try to update your Binance app, and then you can find it. So yeah, that's the 3 updates I have. Hope you guys like it.
Great. Very, very informative. Thank you, CZ, for sharing. So now let's take some questions from the audience.
Well, amazing. So we've gathered a few questions from Twitter to start, and we'll take some more live questions from Twitter at the end. So let's start with the first question. It's from Paul1 on Twitter. So here it is. What are your thoughts on key challenges for the blockchain ecosystem in 2021, and what are your suggestions to tackle them?
Well, I think the one of the first challenges we are facing already is to handle the influx of volume from Wall Street bets. So that we're now seeing a new generation of users coming in, and they are they're coming in very massively. So they're coming in very quickly. But more seriously, we also need to gear towards institutionals as well. We do see there are different institutions coming, a lot of different institutions allocating a percentage of their treasury into crypto. So that's also a big thing going on. So I think basically right now we're just trying to handle the demand. The demand is really just pushing us, and we just want to make sure we can handle the volume. This is both on this is mainly for the Binance CEX. We try to grow DeFi solutions as well. Binance Smart Chain, which is decentralized solutions running on the blockchain. That's gaining a lot of traction as well. So I think basically for 2021, we just want to be able to handle the influx of demand. That's pretty much it. It's pretty simple.
Okay, thank you very much. And our next question, it's a bit morose, but I'll say it anyway. So from HPD on Twitter, do you have any successes in place to manage everything if you're not available?
Yes, we do. So we do take succession plans and also availability plans very seriously. So for me, it's actually very simple. I just operated my Twitter account, and it's pretty easy to hand that over. We actually do have backup access for my Twitter account, but most of my tweets are actually done by myself. So that's kind of what I do mostly in Binance today. So I'm not really involved in the day-to-day operations that much. I mean, more seriously, I do get involved in some of the more strategic discussions. So I try to get involved more in the things that's important but not urgent. But sometimes urgent things will happen if there's a system issue, etc. I'll just make a few tweets. But also for Binance, though, more seriously, we do have succession and backup plans for everyone. So this includes everyone that reports to me and everyone that reports to them. So everyone do have a backup, and everyone do have people that can step in if they are not available. We work 24 hours. Well, we can't really work all of 24 hours a day. People do need to sleep. They do need to rest. They do need to eat and go relax a little bit. So and things could happen at any minute. So our business structure dictates that we had to have backups from the very early days. And on top of that, we actually already also have a very active rotation plan where all the senior leaders in the organization rotates among different roles. So this includes very, very senior leaders and very, very functional specific roles like the technology leader, the marketing leader. So all of them actually do rotations already. So we do have a lot of this type of plans in place. We want Binance to be eventually run without anyone really involved, or able to function that with anyone not available. So, and we actually want to go to the full extent of being a fully decentralized organization, but we still have some things to figure out there, but we're kind of on that path.
So, CZ is always a tweet away. Next question, how safe are our assets stored on Binance?
That's an interesting question. So I would claim, and a lot of people may debate this, that It's the way Binance stores your crypto assets is probably safer than what 99.9% of the people are able to do themselves. So there is a number of hardcore crypto OGs that says not your keys, not your coins, but I think that only applies for technically advanced people. If you're looking at the mass adoption, the mass people the mass population that's come in, it's pretty hard to keep your crypto secure on your own. You have to do you have to keep your computer free from viruses, from hackers. You have to back it up. You have to encrypt the backup, and you have to have a way to pass on to that to people your loved ones in case if you become unavailable. So there's multiple problems. There's a lot of different challenges there. I actually think this is one of the biggest challenges preventing or actually hindering mass adoption. And for Binance, we actually use a very large number of multiple layers of security protocols. So, and for the asset storage itself, we use a multiple layers of code and hot wallets. And we also use very extensively threshold signatures technology. So TSS is similar to multi-sig, but it's actually, in my opinion, better. So the private key never comes into one place. It's never generated in one place. Even for signing transactions, they never come into one place. The transaction is signed in pieces and then pieced together. So we do have these technologies and this operational protocols in place. So I would say it is very, very secure. But there's no 100% security. You still have to protect your accounts on Binance carefully. If you give your password and username and password away to somebody, and then you don't have 2FA on your account, then your account is not that secure. We do also employ big data and AI technologies to detect abnormal account behavior. So even people who have suffered from SIM swaps, and they reset their account, well, they get their SIM card, well, they get the phone number, and then they use that to crack their emails. And the hacker had access to both their phone number and email accounts. Even in those cases, we were able to stop some of the losses for some of our users, including one case where there was 46 BTC involved, and he's a KOL on Twitter. So yeah, I would say we're probably more secure than 99% of the people that wish to hold their own coins. But for those who wants to hold their own coins, I encourage it. We also offer multiple wallet solutions. Trust Wallet is your own keys, your own fund solution. I self-powered the Launchpad project I just mentioned is also a hardware wallet solution. We also encourage you to use other hardware software wallet solutions that's in the industry. So yeah, so that's what I would recommend for people who wants to store their own assets.
Okay, thanks very much. Very informative, and hopefully that puts some people's mind at rest on that one. But it's also important for us to take our own security as crypto users. We've got to take that seriously too. So moving on to the next question, which is from LA Taking 2601 on Twitter. What is the relationship between Binance Smart Chain BNB and Binance Growth? Sure. So. This is actually a very good question. The Binance brand is used relatively widely. We let our community use that brand. We let multiple of our partners use that brand. We have local exchanges, fiat exchanges using that brand. For example, Binance US, Binance Singapore, Binance everywhere else. We also use that brand for Binance Smart Chain, Binance Chain, etc. So Binance, strictly speaking, Binance.com is the centralized exchange. So that's Binance.com. We have a team working on it. Binance Smart Chain and Binance Chain are both open blockchains, right? So Binance Smart Chain is open sourced, and anyone can use it. And it's ran by a number of. Most of the nodes are ran by the community. We do run a couple of nodes for both blockchains. So, and there's projects running on those blockchains. There's hundreds, maybe not thousands, but there's probably hundreds of relatively decent projects running on those blockchains. And so those projects are relatively independent. They're just projects as part of our ecosystem. And BNB is the native coin on both Binance Smart Chain and Binance Chain. And it's also a token or coin that Binance, the centralized team, initially issued. And but now the use case is really spreading
across both Binance.com, well, all of Binance.com, Binance Smart Chain, Binance Chain, and many other ecosystems. So BNB is the currency, is a coin, and Binance Smart Chain is the blockchain, is the network, and Binance CEX is the centralized exchange. So that's kind of the relationship between the two. We pretty much only own Binance CEX. The other stuff, and the other stuff are really operated by the communities now. And even for Binance CEX, we want to decentralize it further and hopefully fully decentralized sooner or later.
Amazing. Great example of the power of community. So our next question, and this is a very good one from United We Are 246. The question is, if you could speak for 1 minute and be heard by everybody in the world, what would you say?
Actually, so there's one thing I do want to share, which is quite interesting. So we freed ourselves from slavery a couple hundred years ago. But even with internet and freedom of speech, today we don't have freedom on our money. So if you want to spend money, if you want to send your money across to other countries, we don't have a lot of freedom, and we can be made arbitrarily poor because our money is controlled by somebody. We don't have freedom on our money. So we really need to increase the freedom of money for people all around the world. And my quick message is use crypto.
Excellent, thank you. So a slightly less profound but also interesting question from Crypto Bull God. Who within the crypto industry have you not met live in person? And I know you're going to have to rethink now you've met me. But follow-up question, who would you like to meet, and who in the crypto and also out of the crypto industry would you like to meet?
Sure. I think, well, right now the hot topic is in the crypto industry. I think I would like to meet Elon Musk. I have not met him yet. So hopefully one day he's also the richest man in the world. Not that matters that much, to be honest, but I think he's a very strong entrepreneur, and he's helping to push crypto forward now. If you look at his bio, it says Bitcoin. So I think that's a really good thing. I kind of want to meet Satoshi as well, but I kind of don't want to meet him as well. So there's arguments on both sides. It's better if no one knows who he is. So I don't think I'll get to meet him, Satoshi. But so outside of crypto, there's probably two Toms I want to meet. There's Tom Cruise and Tom Hanks, and both are very famous actors, obviously. And I watched their movies growing up, so big fan. And I think we are entering into a new era where we're seeing celebrities, very famous KOLs, famous people pushing crypto, and I think this is really good for the crypto space. So I wouldn't mind to meet some of my idols. So yeah, I haven't met those guys yet.
Okay, interesting. Well, if you ever meet Satoshi, please let us know if he's a she, a he, please.
Or it.
Or it. Okay, so our next question, where do you think BNB will be in 5 years' time? This is from Black, Arizona.
I would hope that BNB will be a native coin on multiple application blockchains in 5 years. So I think we will the Binance team will probably try to help bootstrap a number of application-specific blockchains. Because I think the generic purpose blockchains are not fast enough. They're not able to handle billions of transactions a day. I think Ethereum handles 1.2 million transactions a day. That's kind of the max. And beyond that, that's the maximum you can handle. Beyond that, it's just all whoever pays the higher fees gets processed first. So for truly mass adopted applications, they got to handle like billions of interactions per second or per day. And we want BNB we want to try BNB in multiple of those applications. So hopefully we can encourage the community to bootstrap that, or we will make incentives in the community for the community to do that. So that's kind of what I hope that BNB will be in 5 years.
Okay, thank you. So moving on to our next question from Alexandros_23. Do you have a favorite coin or token?
Well, obviously, I'm going to say BNB. I do like Bitcoin a lot, and I think recently Doge is all the rage. So the later two are very decentralized, so I can name them. I normally cannot name other. It's not that the other projects not good, but I don't want to name specific projects that are still having a project team, etc. I don't want to be seen as biased. But both Bitcoin and Dodge is kind of abandoned already, so no issues there. But Dodge, because that is abandoned, it actually is more decentralized in that way, which is really, really unique in the crypto industry. And that decentralized nature of it has a lot of value. So yeah, those would be my favorite coins for now. But I actually don't buy and hold coins myself. I just hold BNB and Bitcoin. So that's pretty much what I hold.
Amazing. Very interesting. Thank you for sharing, CC. So great. We have a few minutes left for live questions, and there's a few coming in from Twitter. So let's jump right in. The first question from Twitter. Hello, CC, my man. What are Binance policies regarding regulators? Is worldwide compliance your goal? This is from
so yes, yeah. So in terms of compliance, Binance wants to be the fully 100% compliant organization. So we don't like to bump heads with regulators. We don't like to cause trouble anywhere. We want to operate where we can, and we typically in most jurisdictions we partner up with a local partner and then get full regulatory compliance before we operate. And that's kind of that's kind of the key approach. So we do view, to be honest, I do think in the last couple of years we've seen a lot more regulatory clarity. But at the same time, I think the first iterations or the first versions of regulations are going to be overly restrictive to some extent, because even if I was a regulator, what I would do is basically take the existing financial regulations and try to apply them to crypto. But crypto fundamentally is a new asset type, is a little bit different. So I think, but over time, I think the regulations will adapt to fit crypto better. But there are still a lot of places where there are unclear regulations around crypto. That's still probably the larger part of the world. And so anywhere that has clarity, we want to be compliant. And that's basically our stance. That's especially for the centralized exchange. The decentralized exchanges, we want to look, the projects run on the blockchain, and we don't have any say on that anyway. So I'm kind of curious as to how regulations will shape up there. I'm not an expert.
All right, and you share a little bit about this one, but this is the next question from Giovanni. How fast do you think Binance Card will grow over the next 12 months?
Well, right now it's growing really, really quickly. Actually, even though it's only available in Europe, we're seeing like every week we're seeing thousands or tens of thousands of cards being shipped out. So it's actually going at a pretty high rate. I don't have the exact numbers on my head. Again, the way Binance works is like each team, they work relatively independently. I actually don't have all the details. But I do see very significant growth for Binance Card. And you can tell from just from Twitter, right? Every time I tweet a Binance Card photo or just mention Binance Card, there's always people say, hey, when my country, when this region, when that region. You can tell the demand for that is really, really strong. So I think there are a lot of people who just want to stay in crypto and just want to be able to only spend crypto when they need. They don't want to hold fiat. So I think the use case there is the demand there is very, very high. So I do think it will probably see multiples of growth. So not just like 50 or 100%. We're probably going to see 5-10x growth over the next 12 months or so.
Fantastic. Sounds good. The next question is from TechGraph. Will you bleach your hair?
Me to white or to black? I'm not sure which color I should go for. And I think on Twitter the hair is yellow, so I think yellow is the new color. Yeah, so I don't do those things. I never colored or dyed my hair ever. So I'm just always a boring guy. Never really got into those type of things. I just take a clip and clip my hair myself. It takes like 3 minutes really. So I cut it like maybe a week ago now. So before like this part is white. Yeah, so that's that.
You did a very good job. Maybe we can do a poll. Which color will you bleach your hair?
I think right now yellow is the color.
Right. Okay. All right. So the next question comes from Alex. What do you think about Dogecoin?
Yeah, so I mentioned it a little bit before. I think Dogecoin is really, really interesting, right? So it started as a joke coin, and then and then it turned into a meme coin with the cute Shiba. Everyone loves dogs, myself included. So it's got a really strong marketing, decentralized marketing force to it. And then the founders clearly transparently said they're no longer going to work on it. It actually makes the coin actually more decentralized in that way, and people like it. And right now, it's like you went to the top 7 in terms of market cap, which is really, really amazing. So it goes to show that look, in a decentralized world, anything can happen. People have the freedom to buy what they want, and yeah. So I honestly, I thought Dogecoin would have died a long time ago, but I actually did not understand the other aspects of the value of being a decentralized coin, and that's relatively low cost. And so the use cases for things that, or at least I cannot imagine beforehand. But I think it's cool. People like it, and we go by users. So if more people like it, then we will support it. So I think Dogecoin is pretty cool.
Awesome. Very cute too. I love it. So the next one is a request. Could you please say the funds are Safu? And this is from Crypto Amendment.
Sure. Funds are Safu.
All right.
So this actually came from a YouTube video that some YouTuber made, and I think it's Bionic. I can't pronounce his username, but he actually he became quiet recently. I don't know where he went, but that video is still on YouTube. I tweet it once in a while, but it's a really, really cool video. Yeah.
All right, so probably we'll see some new videos from you with this funds are Safu. Let's see. Yeah. The next question: what are the top 5 projects you like on the Binance Smart Chain? And this one is from Crypto Snorlax.
So again, so my view is impartial on this way. So I basically look at the rankings from different ranking sites. I do try to give the more popular ones a bit more attention and also more exposure. I try to retweet more tweets from, say, PancakeSwap is probably the most active project on Binance Smart Chain right now. But there are a number of really interesting projects which I do try to tweet and promote from time to time. I don't want to go down a list where it could be seen as biased, but look, if you're in the top 5, even top 10 projects on Binance Smart Chain, I will tweet it for you constantly. So I don't have any associations with those particular projects, so I just want to promote them.
Very good. The next question will be, what was your vision of Binance at the beginning, and how do you see it now?
To be honest, at the very beginning, we just want to make an exchange that people will actually use. That was really it. 3.5 years ago, when we first started, it was like, well, let's launch this thing and hope people will use it. And we were saying, well, let's hope we can get in the top 10 within 3 years. That was like aspirational enough back then. But things change quickly, and this is a new industry. Things are very dynamic, and I did not imagine the ecosystem this big 3 years ago. So, but a lot of that growth is now like purely organic or purely community driven. So, especially if you look at Binance Smart Chain, there's so much stuff happening on there. I don't even know what's going on. People think I know all the projects, but I don't. When I first started Binance, we just wanted to make a place where we make it easy for people to access crypto liquidity. So basically, we wanted to do a crypto to crypto exchange. We kind of knew that it's going to be a large number of coins. So that was the original mission. But then it kind of evolved into the ecosystem now, which is pretty interesting. A lot of that is not designed by me. It just happens. It was just grown by the team.
Absolutely. And this is one of the favorite parts of the community, all the innovations and products that we put out there. So let's jump into the next question. Why are the stocks and other assets like silver and gold not on Binance? This one is from Giant Crypto.
To be honest, I think we could do it, but we want to let some of the other smaller exchanges pioneer it first and see how things go. I think there is number one, we have a lot of work to do. We have a lot of other more fundamental work to do, which like just handling the literally millions of users per day that's coming into Binance ecosystem right now. So we're kind of struggling a little bit to keep up with just maintaining. Just being able to handle the influx of users on our existing products. And also with silver, gold, this have more physical aspect to it, like where are the silver and gold held, etc. There's also more regulatory implications when we're dealing with other assets like stocks, securities, etc. Some of these issues are not our top, we're not experts in them. So the approach we take is basically let somebody else pioneer first. And if they want, after they figure it out and the market is proven, we can try to add those onto our platform. So that's kind of the approach we're taking with some of those more newer, innovative products. But we're not saying that we will never support them. It's just we'll wait and see. I think there's already a number of very innovative newer exchanges in the industry doing it, and I always encourage them to go for it.
Cool, thank you. Very interesting to watch this space on that one. So on to our next question. So this is from Abrugo Goodness. What is your favorite way to really break down the concept of crypto and Binance to a layperson?
So what I found over the years is that crypto, there's so much in crypto, it's actually really, really difficult. I've tried this many times, but I think the key is to figure out what's important for that person you're talking to. If that's a corporate treasury guy, you'd be like, look, safe havens, stable store of, or the store of value. And you can talk to them about inflation, all these other more advanced concepts. Inflation should be a basic concept, by the way, but anyway. But if you're talking to say a friend of mine who's not really into finance, etc., I just said, look, putting like, I don't know, 1% or 5% of your net worth into crypto and see what happens. Just go buy Bitcoin or Binance Coin and see what happens. But there's a risk. So with people who cannot tolerate risks, who cannot tolerate any short-term price fluctuations, actually don't introduce crypto to them. So I think it depends on the person you talk to. There's not crypto. I think the concept should be simple, but it's actually there's quite a lot of stuff there to get over the initial barrier. But I always just recommend people to either sign up for an account on Binance or download a wallet and try it. Try it with like, I don't know, $100, $500, and then play around with it. That's usually the way I try to encourage people. I've tried to explain the concepts. It takes too long. And I'm not a very good I'm not a good teacher in that regard. So I think there are many other better people, and I point them to YouTube videos as well, and Binance Academy videos, etc. So yeah, that's how I do it.
Yeah, Binance Academy is a very good place to start, and we should also add, don't ever put in what you're not willing to lose. And our next question is from Giovanni, still on Twitter, and he wants to know how he can get a job at Binance.
Binance, just go on Binance.com, look at the careers page, and pick out what interests you and what you're good at, and hopefully that's also what we're looking for. And that's the most direct way. The other way is to just be helpful in the community, get our people to know you. And you can become a Binance Angel first, and then apply for a job. Binance Angels we do give them much higher priority in terms of evaluations and considerations. So yeah, that's probably what I would recommend. Yeah.
Mm-hmm. Definitely, Angels is a good way to get into. CZ, the topical situation of the week. So how much has the GameStop boom led to an increase in user base on Binance? That's from Addy.
I think it definitely contributed quite a lot. It's hard to measure, right? Like we don't know which users came because of GameStop. We don't have a questionnaire for them to fill, etc. So we don't really know. But but just judging by the numbers and the amount of traffic and the type of users that's signing up right now, I think GameStop definitely triggered something. Wall Street Bets guys are really they definitely came in, and also if you look at the Dodge trading volume, that's also quite high. So there's not a direct way to measure precisely because we don't know who came, because we don't know why people came on an individual basis, and we don't ask for that kind of information. But just sort of gut feel, there's definitely a huge impact from GameStop, Wall Street Bets, etc.
Mm-hmm. Okay, interesting. As we all know, correlation does not equal causality, but it's a funny spike in users, right? So on to our next question from Descartes, which might be a play on Descartes. How safe is user data like KYC info?
So we do hold that with the same security infrastructure that we hold people's trading data. So it should be relatively secure, but again, there's no 100% security. And also, the other thing you got to understand is in any jurisdiction, the law enforcement or other regulators can potentially ask for the KYC data that's stored by various centralized exchanges. So and also we do use third-party KYC vendors, KYC verification vendors like Jumio, WorldCheck, a number of other third-party vendors that actually do check KYC information. So there's an aspect of that, and sometimes those guys have leaks as well. So I would say we do try our best to hold that at the same level as we hold security for the most sensitive trading data, etc. But we do have to use third-party tools from time to time, etc. So yeah, that's how we store it.
Mm-hmm. Cool. All right. Thanks for that. So our next question we have from Mariusz Bruges. How do you guarantee that BUSD will maintain its price?
That's very simple. So BUSD is actually not issued by us. It's actually issued by Paxos. So we just have a partnership agreement where they use the Binance brand name. So it's Binance USD. But it's not issued by us. It's not issued by Binance or any Binance affiliated entities, other than we have a partnership with Paxos. So Paxos is not a Binance owned or invested entity, etc. Paxos is also NYDFS registered, so they are a licensed trust custodian for in the U.S. So and they're audited periodically and by large third-party auditing firms, and also I will assume probably by some regulators to some extent. So with that, I'm personally very confident that the reserves are 100% there. So this is very different from other stable coins where we don't know whether the reserves are there or not. So that's the way how BUSD works. So we rely on a fully audited, licensed third party in New York to manage the reserves. So that's basically how BUSD works.
Okay, cool. Thank you for that. So on to our next question we have from Berka Iruz. What would you recommend to a computer science graduate to focus on the area of blockchain? So I guess he's looking for recommendations for potentially projects that he can work on, or she, excuse me, or topics to focus on.
Yeah, I think there are definitely a very large number of projects that you can work on. You can try to make newer wallets, newer exchanges, newer decentralized exchanges, games, I don't know, gifts, NFTs. So there's a lot of different ways to try different things. And there's always a limited amount of ideas. So the few things I mentioned now are probably closer to what's being worked on in the industry now. But there are actually more fundamental things you can work on as well. You can work on, say, for example, we're looking for AI customer support solutions that's dealing with a blockchain. For example, people make a deposit through the blockchain. They're impatient. They ask right away, hey, why is my deposit haven't arrived yet? And if we have a bot that can check the blockchain transaction and figure it out and give a response to the user, that's pretty good as well. So there's a lot of different things that's going on there. So I wouldn't say one idea is better, one area is necessarily better than the other. Anything can explode. Anything can experience exponential growth if you do a good product. It's really down to the product area. But if you're just a computer science graduate student, you're probably working on a more academic thesis type of project. Any of those areas are quite interesting.
Cool, thank you. Hopefully that's helpful to the computer science students and grads out there. Okay, so we've got our last question coming up now, and this is from Nick. Will there be a copy trading function for the futures? Very interesting.
Yes, I think sooner or later there will be. We do have the leaderboard function already, which now is like the first step before that. So now you can actually see what you can see if a user is willing to share their positions and how they trade. You can see that already. But now you have to do a copy trading manually, which is not efficient. We are looking at different social trading solutions and designs. I wouldn't say it's the highest priority for us right now. I know a few other platforms do offer similar features, and they seems to be pretty popular among the new retail users. But it's definitely has been discussed, has been considered. I think eventually it will be there. I actually don't know a timeline for it. I think that would naturally evolve out of the futures leaderboard area. So I think sooner or later we will have that feature.
Fantastic. Thank you so much. Okay, that's all the time we have for questions today. Cici, thank you so much for joining us. It's always a pleasure.
Thank you so much. Have fun, guys.
Thank you. All right, so if you want to Cici, join his crypto chat on Clubhouse tomorrow, February 3 at 10 a.m. Singapore time. So again, be sure to check out our newest beta pay feature, which you can find in the Binance app, available on iOS and Android. And we'll be right back after a short break.
Welcome back, everyone. Hope you enjoyed hearing from CZ. Great to see Dogecoin back in the throes of excitement. So I got to, on that note, give a big shout out to my puppy Toshi. I'm sure you all know why he's named that. So next up, we welcome Jack O'Halloran from our sponsor, Skale Network.
Hello, everybody. My name is Jack O'Halloran. I'm the CEO of Skale Labs and one of the co-founders of the Skale Network. So we're going to be talking about scaling blockchains for Web3, DeFi, and beyond today. And by the way, it's an honor to be here for Binance Blockchain Week. I know there's some amazing speakers and talks, and I'm humbled and honored to be a part of this. So without further ado, let's get into the talk. So we all have heard about blockchain scaling issues. It's 2021, not 2017. I think we have a pretty educated audience here, so I'm not going to go into too many specifics. But what I do want to use is an analogy, and I think one of the reasons why blockchains are slow is that there's one blockchain, and all of the applications share one lane or one blockchain. Now, imagine this were a highway. It's every single car is on one highway. That's not very effective. What if we could have a scenario where every single application shared the major highway, but also were able to have its own blockchain? And that's the dynamic that you get when you combine a large shared blockchain like Ethereum with an execution blockchain or an elastic blockchain network like the Scale network, where every application in the Scale network gets its own lane as if it were a car, yet it can still use the major highway and get on and off as it pleases. And so let's get into some more technical details of how this is not just a concept, but now a reality. So the secret lies in the premise of pooled security. And one of the values of having less validators is that you get faster block times and faster execution. In the Scale network, if there were 10,000 nodes, at the end of the day, you'd still have 16 nodes working for you at any given time. And so you get your own lane and a subset of the broader pool. Now, here we have an example, an extreme example where there's 3 nodes. And if 2/3 of these had to agree and this was a blockchain, that's not very secure, even though it's going to be very fast. There's collusion issues that could happen. Now, if we have a lot of nodes and at any given time, 3 of them are selected, we naturally get more security. There's pooling of security. And then if we can have a randomness function and a rotation function, we can keep moving around who the nodes are that are going to run the blockchain. And then to corrupt this group, I would need to corrupt 2/3 of the bigger group, even though at any given time, only 3 of them are actively working together to run a consensus, okay? That's the model of pooled security. Now, the Scale network does this through a randomness, rotation, and incentive function. So let's say I have a game or a DeFi application that's on Ethereum. I say, hey, I want to run a Scale chain and I want it to be fast. What I can do is go to the Scale network, and then I'm randomly assigned a subset of nodes that work for me. And actually, the Ethereum mainnet security and a set of smart contracts in the mainnet work with the Scale network to make this happen, okay? And then I have these nodes that work for me, and I have my own blockchain that's fast, okay? And then what happens is these nodes, to prevent them from colluding, would be randomly rotated in and out, okay? And so that's my rotation component. And then there's also an incentive component where, if these nodes act maliciously, they need to be penalized. Well, in the Scale network, there are about $500 million of USD value staked into the network right now at the time of this recording. And each node has over 3 million staked into it in USD value of Scale tokens staked into this network, and actually gets staked into the Ethereum mainnet. Now, the Ethereum network and the Scale network work together, and that's how we get this big highway model and individual lane model, okay? So, and so again, randomness, rotation, and incentives provide pooled security. Okay, and so if I'm an application, I have my own blockchain, it's my own amongst many other blockchains. And what I'm getting at the end of the day is an app-specific blockchain. And hopefully where I can run high speeds, fast block times, very low costs, and also have some other things that I'll talk about here in a minute. Now, in order to make this work, you cannot just deploy one node per chain. You're not going to get scalability out of the network itself. We need cost effectiveness and scaling even amongst the network. And so what is utilized here are containers. And so we can deploy a containerization strategy. And you look at Amazon Web Services, Google Cloud, Baidu, Facebook, Google, Twitter, Salesforce.com, any of these large companies, they're all using containers, okay? And these containers help you get a lot more out of each server. And on the Scale network, not only do we get more efficiency, but we also get configuration, where as an application, I can say, hey, I just want to buy a little bit of the compute resource and have a small chain, or I want a medium chain, I need more throughput, I need more storage, or I want a large chain. And that is enabled through the power of containers. Okay, now let's talk about the Web3 cloud. And I think a lot of people mistake Scale for being an entirely unique network that acts as a side chain. And here's a model where there's one blockchain, one consensus that's shared and connects to Ethereum. And this is actually other typical side chain solutions, which I would not categorize Scale as one, would be considered would be connecting another set of nodes that run consensus in a shared way to the Ethereum mainnet. On Scale, again, we have a pooled model where every application gets its own blockchain that can connect to Ethereum, okay? And these two networks are interoperating and connected together at its foundation. But the Web3 cloud the vision is much bigger, where each one of these blockchains in the Scale network not only can do transactions and smart contracts, but they can do file storage. You can incorporate machine learning models into the smart contracts and have smart execution. And what we're trying to build here is a model where not only are there transactions going between the Ethereum mainnet and each individual chain, but there's a world of blockchains, just like the internet, these with weakly coupled databases where each one of these Scale chains is a unique blockchain that acts as a backend for a decentralized Web3 application, okay? And you could, if you think about this, you could have a fully decentralized Uber, Google, Twitter, Facebook, et cetera, business applications, CRM, ERP, marketing automation tools, lead generation tools, et cetera, running in community models, in democratized business models enabled by smart contracts, virtual machine, and blockchains. And this model too, every single application that's using the Scale network not only can interact back and forth with Ethereum, but they also can talk to each other. And then instead of having latency and high cost to communicate and message and trade assets between each other, they can do it in a seamless, very low cost manner when they're operating between each other and anchored into the Ethereum mainnet. And that's the vision of the Web3 cloud. And that's where there are stepping stones to get here. And we're pretty excited about it. And I think a lot of people in the space are excited. In general, there's so many things that are coming together right now. 2021 will be a breakout year. Okay, closing up the presentation. Just want to say the network's been live since October 1st. There are over 153 nodes in the network, pooling about $500 million of USD into the network. There have been over 4,000 delegators that have staked from over 90 unique countries and 46 validator orgs with very high decentralization. So we're excited about the pooled resources that are there to provide security. From an application perspective, there's over 70 dApps, businesses, and government organizations that are going to be running or that have signed up for the Scale Innovator Program and are testing and are planning to run on the Scale network in the near future. So 2021 is going to be an exciting year where we're going to see a lot of DeFi, gaming, and other mixed categories coming and deploying on the Scale network. And we're going to see these applications also using ecosystem partners such as Chainlink, which was one of the most recent ones integrated, Arweave, Portis, Fortmatic, MetaMask, Consensus, the Graph, and many more. So we're excited about the next steps here in 2021, and it will be an exciting year. So again, Binance Blockchain Week, been a pleasure. Thanks for having me. Have a great day.
Hello and welcome back, and thanks very much for Scale Network for comments there. It's very, very interesting to think about app-specific blockchains in terms of containerization. Anyway, moving on to our second panel of the day on blockchain data and analytics. So with this panel, we take a look at the intersection of blockchain and big data, learn what blockchain analytics reveal about Bitcoin adoption, and how patterns can be used to forecast upcoming trends. So over to you, Kat, to introduce.
That's right. Of course, we have Kristen Kim from CoinDesk who will moderate this session on unlocking insights with blockchain data and analysis. Welcome to Kristen and our panelists.
Hello, and welcome to our panel on how to read data on public blockchains. My name is Christine Kim. I'm a research analyst at CoinDesk, and I'm excited to chat with my guests today on day 2 of Binance Blockchain Week, focused on the future of cryptocurrency trading. To discuss the many topics tied to what metrics and data points are important to watch for on public blockchains, I'm joined by Ryan Selkis, the co-founder and CEO of crypto data startup Masari. Hi, Ryan.
Hello.
We also have Frederick Haga, the co-founder and CEO of Dune Analytics, which is known for their data analytics on the Ethereum blockchain. Hi, Frederick.
Good to be here.
And also joining us is Bruce Pond, the CEO of BigChainDB. BigChainDB is a blockchain infrastructure company that is building the Ocean protocol, which you may know notably raised $6 million in an initial exchange offering back in 2019. Hi, Bruce.
Oh.
And last but not least, we have Alex Bertoggi. She is the risk manager at Aave, which is a decentralized finance lending protocol on Ethereum. Great to have you, Alex.
Hi, everyone. Good to be here.
So to kick off our discussion, Alex, I want to start with you and ask, why do you think it's important that investors and users get familiar with reading blockchain data as a way to, say, evaluate the risk level of a crypto project or a blockchain? Because in traditional finance, there's a number of ways you could evaluate the legitimacy and performance of a company or service. But I do get the sense with crypto, there's a lot of users that can and need to, to a certain extent, learn how to read blockchain data and kind of see for themselves what the data is telling them. Can you elaborate more on the importance of blockchain data in the industry that you work for?
Yeah, absolutely. And actually, that's a switch I've had to do moving from traditional finance to the blockchain space and having to adapt, because in traditional finance, actually, a lot of the data mining is done for you. And working in a company, you receive the databases that are pre-treated, whereas in blockchain, it's up to you to go get them. So blockchains are really, really interesting for that because they're a shared database. So it's basically an open, transparent ledger with every single transaction that's ever happened. And so in that sense, I'd say it's one of the most data-rich industries because every single action is recorded, and it's also auditable at the most granular level. So in terms of risk assessment, you can really, really understand without question what happened, whereas in the traditional space, it's not always the case. There's often delays in reporting. The disclosures are not always of quality, and there's quite a lot of fines, even to professional reporting firms, audit firms, for lack of interrogation and poor quality audits. So that's a real advantage of blockchain, where the full disclosure of every operation gives you all the insights on the processes, the activity, and the number of users using each project. One thing to note is that it can be quite difficult because each project has its own data infrastructure. So actually, it's not that easy to transition from looking at one project to another project.
That's actually the exact next topic that I wanted to get into, which is, how do you read blockchain data across different chains and what's really so unique about reading data, say, about Bitcoin versus Ethereum or even Ocean. Bruce, can you explain to our listeners a little bit more on that topic? Like, what are some basic important metrics you can watch for on all public blockchains, and what are some unique ones that you wouldn't necessarily see or get that are specific to certain networks?
So in terms of Ocean, we run currently on top of Ethereum. So any data that you can read off the Ethereum blockchain is stuff that we see. We use actually a host of tools to track the movements of tokens, or at least allow our community to track movement of tokens, whale trades, all that sort of stuff. How much is on an exchange, what the kind of makeup of the holder kind of profile is, how many people have held for more than a year, all this kind of stuff. So this is really good insights that we've been capturing. Specific to the Ocean market, what we do is we it's actually really new. What we've done is we've done a pretty innovative kind of twist on the ERC20 token, where it actually represents data and the value of the data, and there aren't any analytics. So right now we're seeing some startups who are becoming the Mazaris and the Dune Analytics of the data space in crypto, Web3 native and everything. And so that's really encouraging to see. We have about 12, 15 startups who are now providing these types of insights on liquidity of the data sets, the amount of consumes, what the data is all about, analysis of it. And so this is what we're actually starting to see, is that all the tools that we were seeing, for instance, in traditional markets that has now moved into crypto is now going to be applied to data as an asset class. And so that's kind of the green shoots in terms of how we start to financialize data, which is kind of what Ocean is trying to do.
Gotcha. And speaking specifically to Ethereum blockchain data, since we're kind of already on that topic, Frederick, I'm curious to know, do you have any use cases, or maybe not use cases, but any scenarios or case studies where Dune Analytics has a dashboard that helped users figure out something about a blockchain project, a DeFi project, say an app, an Ethereum app on the network that wasn't being totally honest about what was going on their network, but you were able to kind of uncover the reality of what was going on about, say, the value of a coin, the activity of a coin through the blockchain, through what you were getting from Dune Analytics. Tell me about a case study where the data from Dune Analytics was particularly useful to Ethereum users.
Yeah, so I think one thing I will say is that sort of given how early and immature these markets still are, like it's not like you can actually point out info and like the price will adjust accordingly, to put it like that. Like people don't necessarily incorporate data directly into how they invest at this stage, I would say. So it's not like the sort of expected outcome that you might want to see in markets, except maybe unless the last 2 weeks everything is thrown up in the air anyway in that world as well. But so basically we've had sort of on Dune, you can query the data on the blockchain, you can visualize it and present it, and then the way you get that data is open. So we definitely had people that engage with different sort of teams that create data on Dune, or other community members where they see that like there's some flaw in the method there. And I think that's pretty interesting and powerful, because obviously a lot of places elsewhere, like you just have to trust the data and the curation or the abstractions and massaging that's done. So that's really cool. But I have definitely several examples. I don't really want to out someone, because I think sort of there's a lot of learning as well here. So people go on, build dashboards and try to sort of show valuable information, and sometimes they don't do that. And I think we haven't really seen sort of blatantly sort of wrongdoings in how people do the data, but we do see that people scrutinize this and give feedback and sort of try to help people to do the right reporting. But yeah, I would also say that even though sort of there can be errors in the data here and there, it's not like crypto just adjusts to sort of the new information. It's not really how it works right now. But over time, I think that will be more and more the case.
Drats, I wanted you to air all the dirty laundry of the bad data analysts out there on Dune Analytics. Yeah, rat people out. Just kidding. But no, I think you touched on a really good topic of how price doesn't actually always incorporate blockchain data or respond to blockchain data in the way that we think it should. And Ryan, this is kind of a perfect question for you, because Messari aggregates a bunch of data across hundreds of crypto assets. But it's not just blockchain data you guys are aggregating. It's also markets data and how these crypto assets are trading. So can you talk a little bit about the power and the importance of mixing blockchain data with market data? Is there like an example from when your analysts or you yourself have leveraged both to figure out something new or interesting going on in the industry?
Well, I'll answer that. Maybe I'll give you a little bit of what Frederick didn't want to in terms of gleaning signal from I don't want to say bad actors necessarily, but uncovering and making transparent some actions that were previously swept under the rug. And we actually did this ourselves with both the Ripple and Stellar blockchains. We built out something as simple as their supply curves, right? Just looking at the addresses, mapping the addresses. We were one of the first to call out that Ripple's market cap was overstated by about $6 billion. This is early last year. And we were able to kind of trace where the founder wallets were and how much was in the affiliated foundation and how much was kind of sent from the escrow account to the liquid account, but kind of still locked in liquid treasury. And we've actually seen those wallets move, and we've seen kind of gradual liquidations over the course of the last couple of years, which is why XRP was one of the few assets down last year, even before the SEC complaints. And then we also found an inflation bug that had previously been unreported and swept under the rug by Stellar, where they used what was earmarked for community funds to basically backfill this hack that had occurred in 2017, back when the price admittedly was much lower, but it was still kind of a multi-million-dollar cover up or kind of switching from one hand to the other. And then even as recently as yesterday, Mark Cuban himself doxed his own address and kind of made it possible for people to see what he was actually holding because he tweeted about having this kind of NFT art. So I think, echoing Frederick's point, there is a ton of signal that can be gleaned from on-chain data. But we were kind of very early in taking a risk that aggregating all of these different types of data from open sources was going to be the path to success for an information platform. And quite frankly, I don't think would be as effective as a company if we didn't have folks like Dune and the Graph and other open source query infrastructure in place that can actually be built upon, right? So our bet was that ultimately all this information and data is not going to be paywalled cover to cover. There's going to be other monetization models, and we're basically all going to be able to build from the same common stack. And so our focus has been on marrying qualitative and contextual and historical disclosures or other kind of biographical data on these assets with markets data that we trust and clean through a partner like Kaiko, with on-chain data that we trust and clean with a partner like Coinmetrics. And then for all these other kind of project or sector-specific KPIs that you really need to rely on middleware like Dune or the Graph or some other open source infrastructure to actually put together the composite pieces. Frederick had a great post just this week about kind of the real-time evergreen S1 or 10K for different crypto assets. And I think that's exactly what we're trying to build with our dashboards around that kind of common framework that some of these other query infrastructure providers have built out on the purely quantitative side already.
I love this support for one another of data providers like Dune Analytics supporting data aggregators like Masari and you mentioned Coinmetrics and Kaiko. It's really great to hear how much team play there is in the industry, in an industry that does kind of seem more dog eat dog and crazy all the time, and people just trolling and criticizing each other on Twitter a lot.
As long as Frederick doesn't rug pull me, we'll have probably a dedicated engineer just to Dune dashboards in the next quarter or so.
Yeah, no, definitely. So, I mean, talking about some of these different layers, I think everybody has a different way of using the data, incorporating the data, and making it valuable for users. So, Alex, as a risk manager for Aave, are you in the business of innovating new metrics, taking in data and innovating new blockchain metrics for evaluating how risky DeFi projects are? What kind of data points are you looking at on your day-to-day that is most useful, you think, to users when they're considering, say, lending or borrowing on Ethereum through an app like Aave?
Yeah, so absolutely. So I'm always monitoring the risks and also building metrics. And actually, my job has become so much easier in the last year thanks to Frederick, who's helped me gave me the tool to actually access all this data. So what are the important metrics for lending protocol? So I'd say the first thing you should look at is the number of assets under management, just to make sure, especially for institutional investors, that there's enough liquidity to cover their needs. The second metric that's quite important to track is the number of users. Make sure that the product is used and that there's growth in the user base that shows that it's moving forward. And then this is actually the metric I look first thing in the morning, the utilization of all the reserves. So every morning when I wake up and multiple times a day, I check all the Aave reserves. It's quite an interesting metric to monitor because I've noticed that whenever all the stable coins are actually really utilized. So what is utilization? Sorry, I'll clarify that. So that's the amount of borrows over the total liquidity. So it's basically the lending protocol is working and the funds are lended out. And so usually I've noticed that stable coins get really utilized when the market is in a bull phase because people are borrowing stable coins to use on the market. So that's quite a good metric that it's utilized, but not too utilized, because the issue is if a pool is fully utilized, then depositors are not able to withdraw liquidity. So then you're a bit attached to the protocol until utilization is available. Another important metric to monitor the health of the protocol, and so that is crucial risk-wise, because if a protocol is not healthy, you may put your funds at risk. So for that, you have to look at the protocol's exposure in terms of assets. So in the lending protocol, there's two parts. There's the liabilities, and that's the outstanding loans, and then there's the collaterals, which are the assets. And so basically, the assets need to fully cover the liabilities. So these are two important metrics to look at and to compare in terms of exposure before investing in a lending protocol. And then I'd say the last metric, combining these two, it's the collateralization ratio. And actually at Aave, we've created a risk-adjusted collateral factor that's called the health factor. That's actually the indicator of the health of a borrow. So basically, it's the scaled collaterals over the borrows. And when it reaches 1, that means your borrow is going to get liquidated. And I would say a healthy borrow, to kind of reduce the risks of liquidation, you need to have at least a 3 health factor to make sure that it covers some market volatility.
Those are some really great metrics, really specific ones. And thank you for those explanations on some metrics that are really good for evaluating risk and the health of a certain borrow or
Can
trade.
I add a point here?
Yeah, of course. You're like the superstar here. Everyone's like starting off by saying, "Oh, I'm Frederick." So yes, go ahead.
Well, yeah, I think one interesting thing is like obviously Alex is like the risk manager at Aave, but with crypto data, like anyone can actually sort of do the same assessments, and they can like look into, of course, what others are doing, but they can also sort of do their own judgment, and this is all very accessible. And you can go to something like Dune, or you can go to something like Messari, and there's like different levels of curation and all of that. But the key thing is that you can really, it doesn't matter sort of who you are essentially, which is extremely important, and I think a little bit underappreciated. But as I mentioned in like this post that Ryan mentioned, basically like anyone in the world can have, if they just put some time into it, can have like as good sort of overview of this these systems that any like bank CEO can today in like the legacy system. Like you actually look at these raw metrics and go arbitrarily deep and verify, sort of not in the sort of code sense, but just check that, okay, this happened. You can check it on Etherscan, wherever. And you can actually get a sort of perfectly fine overview with being a total nobody, with no one sort of gave you the access to the system. You just check it, and you can slice and dice it in any way you want. And I think that's extremely powerful and going to be even more important when these systems become more important and more people have money in it, and like there's more at stake. That's a tremendously useful and cool feature of these systems that still sort of early in the adoption curve, I would say, but hugely important.
Most definitely. I think that for some users who are just getting into crypto, it is difficult sometimes to take that first step to figure out how it is that I access this. How do I read a block explorer? Do I need to know SQL to be able to make these queries? But there are very user-friendly interfaces, dashboards that are pre-made, websites like Masari that you can just go and see immediate data that is easily digestible, like price. One of the things I want to do in this panel is also give people just very clear tools to kind of take their first step into reading public blockchain data, and useful ones at that. So this next question I'm going to give to you, Bruce, and then probably also ask other people their opinion too on the panel. But what would you say are the top 3 blockchain metrics that you would cite as having a really high correlation with crypto asset price? Because I'm not going to lie, I feel like a lot of people just care about that and think of price as a very important metric, the value of a crypto asset. So I'm curious to know, Bruce, and I want to start with you. I mean, what are the top 3 blockchain metrics that you think have a very high correlation to the value of a crypto asset? I feel like talking about something like this would get people, number one, interested in blockchain metrics, but also, just give them a good starting point.
Oh, I can think of 3, and probably a bonus one. Number 1 is the number of token holders. That shows how broadly it's held. Number 2, the fee volume that is gotten from that protocol itself. So we got token holders, we got fee volumes. I can't remember the third one exactly. The developer community. So how broad is the ecosystem? And primarily on the developers. You can also add in social media, etc. Lunar Crush does that type of stuff. But and then the bonus one would be something like the Doge price, because that's a leading indicator for all the projects.
Did you say Doge price?
Yes, I did.
I hadn't known that meme coin had such a big sway on leading the prices, but that's very good to know. I feel like people are going to start checking that a little bit more closely now. Kind of tied to that though, when we're talking about what is crypto value, what are some on-chain blockchain metrics that are tied to crypto asset price? Are there any nuances in those metrics that you would add, Ryan, for the utility of a blockchain and tracking mass adoption? I'm thinking very specifically about like whale metrics. People often look to that as an indicator of institutional involvement. Any additional blockchain metrics that you would add, Ryan, to track the type of investment that is going on into a network and kind of more long-term value instead of, say, like the day-to-day short-term price levels?
I actually think that retail metrics are probably more important for most assets, whereas for Bitcoin and Ethereum, whale metrics maybe make more sense. So the 2 that I'd look for in Bitcoin and Ethereum would be assets taken off exchange, which essentially goes into cold storage. And then the realized market cap to market cap ratio, which I think Coinmetrics popularized, but basically looks at when a coin last moved and kind of takes the sum of the last movement at the price at which it moved it all up. The 3 times historically where that realized cap has eclipsed the actual market cap have been followed by massive spikes in price shortly thereafter. It was the 2015, 2018, and then the March flash crash predictor. For longer tail assets, the good news with many of the DeFi applications that have come to market, and even some of the other layer 1s that are now switching proof of stake, is you can actually do back of the napkin calculations on what the implied value drivers will be from a fee standpoint, whether they have fees turned on or it's just something that could be done in the future. So for instance, Uniswap's token does not necessarily give token holders the rights to a 5 basis point fee just yet, but it's been proposed in the future. And so if you look at the total liquidity that's available in Uniswap, you can extrapolate out what the future expectations for network cash flows are. SushiSwap, on the other hand, already has the fees incorporated. Yearn already has the fees incorporated. So you can see the real cash flow accrual, or at least the cash flow potential for some of these financialized networks. Same is true to a certain extent with Ethereum and what's going on now with the Beacon chain and staking. Proof of stake in general, I think, can be a little bit like taking money from one pocket and moving it to another, because at the end of the day, it's basically just a stock dividend, unless there's real fees to back it up. And now if you look at the annualized fees for Ethereum, yes, the gas is too high. Yes, there are scaling solutions and other blockchains that are kind of coming to alleviate some of those throughput issues, but there's still real value drivers and financial settlement drivers that are happening on that chain. So I think that's the new norm. And then every other sector is going to have its own bespoke metrics, right? So I just mentioned DeFi in a broad bucket, but the value metrics for decentralized exchange versus lending versus insurance are all going to be slightly different. And I think that will, we will find the right KPIs per sector and help define them, and it will become hindsight. But for those that are discerning individuals now, they'll be able to capitalize on those information, discrepancies. And then for other types of kind of new emerging assets, they're going to be, very, very wildly different value drivers. Oceans are going to be different. Filecoins are going to be different, securitized by some other real valuable good that isn't necessarily a financial product, but it's actually, discrete data sets in Ocean's case, or secure data storage and provably committed data storage in like Filecoin's case. But I think the big difference between now and 2017 is there's real underpinnings for many of the top assets today. Not all, but many of them, especially the ones that are non-money.
Anything you would add there, Bruce, especially on the topic of there are specific metrics that may not be as popularized as some metrics on Ethereum and Bitcoin, but that users still need to understand and know in order to be able to transparently look at what's going on in the app, right? And I think it's very clear that, to some extent, data analysts and researchers are the ones to kind of proliferate how to correctly read a blockchain, but also to the extent of a new project coming in, say a lesser known project, to some extent, it's like there needs to be some kind of a onus on the project owner and leader to also push the transparency and reading the data of a new blockchain project that has its own unique ways of congesting data. That was a bunch of questions, but I mean, yeah, anything to add there to this topic of new protocols and data, reading data on new blockchains?
What I would say is generally, if it's going to be that young of a system, you're actually dealing with momentum trade for people to come in, and that's where you're talking social analytics more than anything else. Are they developing community? Because honestly, for that protocol, there's no transactions that are going to be able to forecast the growth of that network other than the social adoption. If we're completely honest, a lot of crypto is building community ahead of the product market fit, ahead of the adoption. And so if, for any new chain, like, some of the newer ones that are coming out, like Near, Avalanche, and there's a couple other ones like that, you actually look at the community first. This is more general. I think Frederick and Ryan and Alex will have like much more specific things about existing change, but looking for a broad level view. What I can say is that for our protocol, I enjoy the level of transparency that the community has. When we start out very low, moving all the way till now, more and more community members get involved. They look at the on-chain, they look where the transactions are happening. It gives them the ability to make decisions. And whenever something moves, I get my DMs lighting up saying, why did this move? Where did it go to? And of course, for some things I can disclose, other things I can't because I don't know what's happening. But it's great. It's great power these folks have, and that's what people use to keep us accountable.
Yeah, I do want to talk a little bit about the limitations of reading public blockchain data and the pitfalls you could get into, like confusing, say, the accounts as individual users when somebody could own multiple accounts. What has been kind of the most difficult or, say, frustrating thing about trying to read public blockchain data? Where are the biggest limitations, and where do you think there needs to be more heuristics, more kind of research and development in the kind of tools we're using to mine the data on a blockchain? Frederick, I think you could speak best to this question first, just because Dune Analytics is ingesting so much data. And of course, you guys have many pre-established dashboards that can just part of it, but where do you think there still needs to be development, and what are the limitations right now that users struggle with most often when it comes to trying to transparently read a pseudonymous a pseudonymous network that is sometimes designed to not make things so easy for people to read and understand?
Sure. So I think there's, first of all, it comes a little bit back to the question that you just talked about around like what you actually look at. Like that's still not obvious. Like in equities or some other established assets and systems, it's very clear what's like the playbook for looking at traction, for looking at revenues, whatever, right? And then you have like a bunch of established models for doing some qualified analysis of that. In crypto, of course, like all these systems are new. Like the layer ones are new, the things that are built on top of these are new, and sort of all the dynamics are open questions, right? Is this the right way to do it? Is this the right way to track that, and all these things? But I think we've come pretty good way in sort of exposing that there's actually some traction in a lot of these projects. So like, in 2017, everything was 100% hype. And it's still a lot of hype, but now you can actually go and say, okay, there's a new decentralized exchange. Like what volumes are they doing? That's like easily accessible for everyone now, on something like Dune or elsewhere. And I think that's definitely like a very good step in the right direction, where you say that there are some core product metrics that needs to exist. So like, even though there are holders and there's hype and there's all the other stuff, like we're moving more towards a world where you will actually look at like, okay, this is a product. Someone needs to use this product for sort of this whole thing to be interesting. And you can look at that now. I think what still sort of lacks is more sophisticated metrics. And with that, I mean, for instance, like just looking into how much of the activity comes from whales, right? So that's not something that like there can be 100 million in volume, but like, okay, if 5 accounts for like 90% of that volume, that's a very different story than if there's like thousands, right? So a lot of these things I would say are still undiscovered or not really sort of deeply understood, and also around retention metrics and these typical things that if you're a traditional startup, investors would instantly ask you some of these metrics. And for crypto projects, I still think we're not quite there. We're at the like more basic level right now. So that's one thing. But I will say that I think sort of that people are very concerned with this, like, number of addresses, or like people have many addresses. And to some extent, I think that's true. And some people also are concerned with like, there's a lot of dead addresses. Like if an address interacted with something 6 months ago or whatever, it's probably not active anymore. I think from what you see from the airdrops, like the last 6 months, you actually see that a surprising high share of the wallets do pick up their tokens. Like with the 1inch thing, there was a Dune dashboard, and I think like within a week, 80 to 90% of all the sort of eligible addresses had actually picked up the tokens. So even though sort of that might not be a good thing for like 1inch per se, because maybe people want to dump it, but the interesting thing is like these addresses are actually like actively monitored by their owners. They're not just like laying dead. So I think there's sort of, it's easy to tilt some of these sort of address instead of person stories in like the kind of negative direction. But I think that it's not necessarily that, unless you're very sophisticated, it's not that much of an incentive to have like a ton of addresses. It's just complex and messy, and you need gas and all these things. So and you can also now look at like how many are actually active and engaging with products, and you wouldn't really want to have like 10 addresses interacting with these projects. It's just messy. So I think there's but there's definitely a lot of deeper digging to be done, and also figuring out what should we look at for these projects, and then go deep into those things.
Yeah, speaking further into some of these pitfalls, because I do want to kind of double down on this topic a little bit more. Alex, given your traditional financial background, would you agree that maybe the issue with blockchains and public blockchain projects is just too much data, whereas with traditional finance, it's like not enough transparent data? You're working with filings that only come out once a year, but with blockchain you just have so much data every minute, every second. What would you add to what Fredrik has said about the limitations of public blockchain data and getting clear understanding of what's going on? Anything that you would say traditional finance and the traditional way of looking and evaluating companies excel better at than in the crypto world?
Yeah, I mean, I would absolutely agree with you that, in blockchain, there's definitely so much data that it's hard to deal with, and it's hard to track what's going on in the end. There's kind of a tsunami of data, and you just have to process it. I do think one aspect where we should kind of look at what's going on in the traditional space is just creating common denomination and common standards. Because and actually, I was working with Fredrik on that to compare the lending protocols, and every lending protocol has their own architecture and their own way to name each of the variables. And I think it will become much easier to deal with the data once we kind of uniformize the naming, and it's easier to query different protocols that do the same thing because they follow the same naming rules. So that's one of the things I think overall the industry has to focus on now, is just building standards, building naming standards, reporting standards as well, and risk standards as well.
Yeah, and this is going to be one of my final questions. We're kind of getting to the end of this panel. Ryan, I want to talk a little bit with you about this line between accessible public blockchain data that's readable to anyone and very, like, you just have to have an internet connection and you can get it, versus paid and sponsored analysis of data. So as a crypto data startup, how have you drawn the line between paid data and free data for the users of your platform? Because I do recognize that the kind of analysis we're talking about when it comes to addresses, when it comes to whale activity, a lot of that it's not evident on a block explorer. You can't just hit up like etherscan.com and get all those things. You need to go to a crypto data company to get that. And it seems like there are already experts in this industry that do charge a price to be able to access public blockchain data if you yourself don't have the tools and clearly kind of like the infrastructure to be able to digest it properly. So tell me a little bit about that dynamic and where you draw the line.
I think this is probably a good mental model for most companies in the space, information period, whether you're talking about research or quantitative data. But I think from day one, we've had a quip to draw the line, and that's open data paid tools. So when you think about our subscriber base, whether it's enterprise subscribers or the kind of individual pro researcher, it's all about the paid tools, right? Access to our screener, our charting library, our analyst research. If you're talking about token projects, Bruce and Ocean have been working with us for a while. They pay for basically audit services for our analysts to go through, not only track the project, but make sure that their profile is kept up to date and it's not just full of marketing jargon or promotional information. So think about us like an auditor. And then we also track protocol level events. So that could be governance updates, software releases, things that practitioners that are in the weeds day to day need to know just for their ongoing support of these assets. Less about the kind of speculative nature of the announcement, but just from an infrastructure basis, what do you need to know as everything is moving at hyperspeed and it's very easy to get caught flat-footed if you're trying to look at Discord and Telegram and Twitter and Medium posts and GitHub, when many even big things are swept under the rug. And I think this ethos serves each individual company that's in the information space, as well as the market in general in terms of kind of leveling up and getting the next phase of growth. So, it's not in Messari's best interest to paywall our asset pages and kind of basic data on the one hand. I think, Frederick will tell you it's probably not in their best interest to start gating access to some of the insights unless the specific user is asking to create a private dashboard and paying for that paid tool, right? So I think as we move forward, that's going to persist as a model. One thing that I think changes the game a little bit is you can even get paid on the open data side if you're trying to actually decentralize the stack and tokenize the entire data network so that you have incentives for people to actually contribute to that open library versus just consume it passively and hope that the commons will just kind of maintain itself. So the path to monetization, I don't think is going to be paywalling data anymore, so much as the tools of the ultimate maintenance of those libraries.
Does anyone want to add to that, disagree with that, add anything to that? The last thing that I'm going to do is a lightning round of a very exciting question to kind of finish us off, but want to make sure that
I just have a little something to add on that actually, because I think that the danger with public data, like in Dune, in a way that it's accessible, is like actually it's not checked. So if you use Messari Pro tools, that it's right, it's providing the right information, but actually some of the Dune dashboards, you're not sure if it's right or not because it's been done by a community member. And I've actually had multiple community members contacting me about some of these Aave Dune dashboards and being like, oh, so is that so? And actually, maybe that's something for the future, a little check mark to say that one query is verified and it's right, because that's one of the dangers.
That sounds like a good idea. What do you think about a little query verified, Frederick? Like Twitter.
Yeah, and we definitely are aware that and that's the consequence of having like a very open-ended, accessible product. And definitely this is something we're thinking about, and there or like but it's an important question when you have something that's so sort of open-ended and anyone can do weird stuff in addition to super cool stuff. So yeah.
Gotcha. All right. Well, thank you guys so much for the time. I'm going to move on to our last lightning round. This is just a quick question for everybody. I want to know what you think is the most underrated and underutilized public blockchain metric. It can be from Ethereum, it can be from Bitcoin, it can be from any cryptocurrency, but basically a metric that you do think our audience should spend more time watching, and just a little explanation of why you think so. Because there are some data points that are being unmined. The insights that you get from them unshared. There's the underrated guys that I think you guys as experts on this panel can give a little bit more love to and tell our audience about. So Bruce, let's start with you. What is the metric that you think is the most underrated and underutilized at this point in time?
The first thing that came to mind was like the M1 money supply. So we have double the amount of just roughly, we have double the amount of cash we did as 10 years ago kind of thing. Have we doubled our purchasing power? Has doubled the value been created? If not, then that money has to flow somewhere, whether it's real estate, crypto, or what have you, stocks. And that's a very good sign for crypto in general, particularly Bitcoin and any other coin that has a good token policy.
Yeah, not a blockchain metric, but still something that clearly audience members are not paying close enough attention to. Ryan, you want to go next?
Well, I'm going to disappoint everyone because I don't think it's a quantitative metric. I said earlier, every single segment of this market has a different value driver. And the thinking from 2017 that everything is a cryptocurrency versus a crypto asset has fallen by the wayside in this last cycle, right? DEXs, lending platforms, Web3 platforms, data marketplaces, currencies, so on. They're going to have different value drivers. And so I actually think it's a terrible idea to try to come up with like a blanket metric that works across the board, and I actively discourage it. Something as simple as fully diluted supply versus circulating supply. Fully diluted matters in a bear market, circulating supply matters in a bull market because nobody cares about future dilution when things are hockey sticking. So I'm not calling you out so much as just being aggressive about trying to correct what I think is a misperception in terms of folks doing quantitative research. Instead, I would say it is diligence on the team and network, physical network, human capital network that surrounds various projects. Every single successful project in crypto that has taken flight has had an extremely large and robust community of power users, even without the token freely trading necessarily. This happened with Ethereum and Bitcoin. This happened with Yearn and the other DeFi assets like Uniswap. It's happened with kind of new up-and-comers like the Graph in terms of where this has been implemented. It's happened with Chainlink. So I think the memetics in the industry are strong. And it's not just about the number of Twitter followers or the number of impressions on social media, but actual bona fide community strength takes a little bit of a combination of like a quantitative and then kind of finger in the air, just instinctive feel to figure out like, okay, is this actually solving a critical part of the Lego structure, or is this just something that's going to pump and dump?
Yeah, I love it. Your answer is wrong question, but still very good insights. Alex, what about you?
Yeah, well, I think one metric that's kind of overhyped in DeFi is the TVL, and I'd definitely like to see more of the assets under management AUM metric, because especially for lending protocol, well, the value is being lent out, and it's actually a good sign. So I think it's only showing one part of the picture.
Nice. Frederick, you get the last word.
Yeah,
Superstar.
I will go with good old retention. I think retention of users in these products should be scrutinized more, and it's a good indicator of whether it's actually useful or just some short-term hype or profit-seeking.
All right, that's homework for everyone. Go Google retention. Thank you so much, Alex, Ryan, Frederick, Bruce, for all of your guys' commentary today on this topic of reading data on public blockchains. Thank you to our listeners who are tuning into Binance Blockchain Week. Enjoy the rest of the day's programming. Thank you guys again to the panelists. Goodbye, everyone.
Thank you.
Thank you.
Thank you, Christine, and thank you, the panel, and thanks to all our viewers watching online. So we're over halfway through our programming today, but we've got two very special sessions to share with you. Kat, what's up next?
So, all right, we are very pleased to introduce our next guest, Anthony Pompliano. You know him as a prolific entrepreneur and crypto investor at Pump Investments, as well as the host of the Pump podcast and Pump Letter, a daily newsletter with over 45,000 subscribers. And in this fireside chat, he'll be joined by Robert Hackett, senior writer at Fortune. So let's see what they have to say.
Hi, everyone. My name is Robert Hackett, and I'm a senior writer at Fortune, where I help lead our tech and crypto coverage. I also chair our finance conference. Welcome to Binance Blockchain Week. I'm here with Anthony Pompliano, a man you might better know as Pomp. Pomp is now the founder of Pomp Investments, although he was formerly working with Morgan Capital, and he's still managing some funds there. Thanks for being here, Anthony, Pomp, whichever you prefer to go by.
Absolutely. Thanks so much for having me. Excited to do this.
Okay, excellent. So today we're going to be talking about the future of finance. Let's jump right in. What took Elon Musk so long?
Yeah, I think that he obviously went very quickly from this Bitcoin thing doesn't make a lot of sense to Bitcoin in the bio, which I feel like is the final stage of the video game, if you will. I think the only last remaining obstacle he has is to actually put Bitcoin on Tesla and or SpaceX's balance sheet. But at this point, I think it's going to happen. It's just a matter of time.
So yeah, so for anybody who hasn't been following this, Elon Musk has forever, people have dreamed of him getting on board with Bitcoin, but he's been a little bit bearish on it until very recently. Like Pomp, you said he put it in his bio, actually.
Yeah, I think that, look, it's a thing of you kind of have to get educated. You have to familiarize yourself. You really have to understand Bitcoin, but also understand why it's important. And I think what we've seen happen over the last 12 months or so is there's a lot of kind of macro tailwinds, right? So there's a lot of things kind of going wrong in the legacy system, and people say, well, this is weird, or I don't think this is sustainable. What are the other options? And so it kind of forces them to go looking, and then they find Bitcoin, they go down the rabbit hole, and they get educated. And so in some weird way, I think the Bitcoin community always thought that like people would just hear about Bitcoin and basically become a convert, if you will. But instead, it's almost like people are running from the legacy system and they're finding Bitcoin rather than just running to Bitcoin right out of the gate.
Tell me, who is your personal white whale? Who do you want to come around on Bitcoin? Anyone in the world?
I don't think that I necessarily have like one person where I'm like, man, this would make like a huge difference or create like this massive inflection point. But the one that I do think is kind of the internet would really enjoy the capitulation would be Warren Buffett, just because who he is, how legendary he is from a returns perspective, and also how just egregious and I think severe his anti-Bitcoin stance was. So to get him to kind of capitulate, I think would be the ultimate moment on the internet. I do not think it will happen, but I think that would be my selection.
I believe he said that Bitcoin was worse than rat poison squared, I think was the choice terminology.
Yeah, that, and I think maybe it was Charlie Munger or him said that it was like trading dead harvested baby brains or something like that. So like pretty severe language coming from both of them.
From some of the most notable and successful investors of all time, perhaps the greatest of all time, what do you say to the holdouts? Those holdouts that are still out there right now, even people as eminent as Warren Buffett?
Yeah, I think it's one understanding like why do they believe what they believe, right? And usually it has nothing to do with the technology. It actually has nothing to do with Bitcoin specifically. It's usually a very statist view of the world, right? Like the government will never allow this to occur. And I think that while it's understandable why they hold a position like that, I think that the key piece is they are used to these kind of closed systems that are very centralized. And so when you get them to understand a open, decentralized protocol, I liken it a lot to the internet, right? There's a lot of people who say, oh, the government's going to ban it. And so if you think about why they would want to do that, it's because they either think it's a threat to the U.S. or they think it will kind of aid adversaries, on the kind of geopolitical landscape. And so I always say that, like, well, sure, but that would be like saying, like, oh my God, the internet is going to threaten, the U.S. government and it's going to aid our adversaries. It'd be crazy if we had banned the use of the internet in the United States. We just would have been left behind, right? And everyone would have went and used the internet, and they'd be like, look at these guys living in, kind of caveman times. And so I think very similar here. It's like you have two responses. Like, yes, absolutely, it could become a threat, and yes, it could aid your adversaries. But instead, if you embrace it, you actually can use it to your advantage and kind of further your position and kind of further solidify yourself as a leader on the global stage. And so I think that, that's a kind of weird nuance to the conversation where you basically are both agreeing to one potential outcome, but you're then having to convince them that you should actually pursue the technology for a different outcome, right? So kind of use it, don't let it hurt you. And I think that just takes time, right? They just got to have conversations with people who understand that and kind of can explain it to them. And I find that usually then what you find is they actually capitulate this and say, hey, this is pretty interesting. And they kind of go down the rabbit hole.
When is Buffett going on the Pomp podcast off the chain?
I am actually a very, very big Buffett fan, just less about like the actual investing strategy and more kind of just the frameworks and I think kind of the first principles thinking and his emotional control and the things that make him a great investor. I highly doubt that he is doing podcasts at all, let alone trying to go and do podcasts with people who are screwing around on the internet. So I don't know if that one's going to happen, but if he's listening, I would be more than happy to have him on.
Yeah, I don't think he's getting into new media much, judging by the Berkshire Hathaway website, which looks like it was put up in 1995 and hasn't changed since.
Yeah, I do think he uses email now, though. I think he historically was against email, and I read somewhere that he now has a computer and does use email sporadically, which I guess is an improvement.
Baby steps, not baby brains. So I want to get into your podcasting a little bit later, and just this sort of media empire you've built around your own self and your theses around investing. But before we get into that, I also want to chat a little bit about, actually you were mentioning some of these concerns that investors have about Bitcoin, and you've actually cited two of them yourself. One of them being, cybersecurity concerns about the code base with Bitcoin, but also a kind of coordinated multi-government sort of effort to crack down on crypto, which sounds a little bit like some of the concerns some big-time investors have. I know Ray Dalio has actually expressed this as well. What are the odds that governments kind of get involved and start to not allow this thing to continue to flourish?
Yeah, I think we have a great framework in kind of the legacy world, right? So if you start with like the US dollar, you can't actually regulate the dollar, right? The dollar is an inanimate object. And so what you do is you don't regulate the asset, you regulate all of the entities that transact or are kind of interfacing with that asset. So the banks, the financial institutions, the individuals, those are the people that you can regulate because you can shut down those institutions, you can put people in jail, you can tax people, fine them, all that kind of stuff. But the asset itself is actually not regulated. And so I think very similarly here, if you look at something like Bitcoin, like you can't regulate Bitcoin itself. What you can do is you can go ahead and you can regulate the institutions or the individuals that are actually using it. And so when I hear things like kind of the most egregious example of like, oh, they're going to ban Bitcoin. Well, they can't actually do anything to Bitcoin. What they're going to do is they may say, hey, Robert, you can't own Bitcoin, right? Which would kind of be the ban of ownership. Or they may say to an organization, hey, you can't transact in this, you can't use it, whatever. Now, if a country wants to unilaterally do that, look, they have the right to do that. It's their country. They can do whatever they want. I just think that the kind of global game theory really prevents that or at least disincentivizes that. And what I mean on that is, if you're, let's say, the United States, and you're saying, maybe we should ban all US citizens from actually transacting and holding Bitcoin. Well, I think that just Russia, China, and all these other superpowers are going to run around and they're going to start adopting this. And they're going to say, oh my God, we just got this opening to get off the US dollar system. they already publicly talk about the fact that they think it's expensive, it's dangerous. They would rather not be on a US dollar-based global reserve system. But there's really just no other option, right? I don't see a ruble-driven world or an RMB-driven world. And so it's kind of like Bitcoin is actually the best alternative to the US dollar for these folks. And so if the US, kind of raised their hand and said, we're going to sit this one out, I actually think it would accelerate adoption. And so that kind of global game theory, I think, kind of keeps a check on everybody. Now, the one scenario where I think the Ray Dalios of the world and others say, hey, actually, maybe the governments all get together and like collude with each other. I just, with every passing day, I think that gets harder and harder. Like, you're telling me that Vladimir Putin, right, President Xi and Joe Biden are all going to sit down and they're all going to decide to ban something together. And then they're going to get every other country to fall in line. Like, I just don't see it happening. And so while possible, I think it's improbable that something like that would occur. I do think that the number one concern that people can have and is probably the most probable way that this could all, fail is some sort of self-inflicted wound, right? Like some contribution of code that ends up being, a mistake or inaccurate and causes some issue. But again, I think that the development process drastically mitigates that risk. I don't think we'll see that happen. But to me, that's a much more viable argument to have than like, somehow we're going to get this global world order to like get together and, prevent the success of an open decentralized protocol. I just think one of the countries, says, I'm actually going to embrace this and like, use it to my advantage.
There would be some precedent for the US cracking down. Back in the Great Depression era, they sort of confiscated gold effectively. But perhaps this technology is unstoppable at this point. The genie's out of the bottle, people say.
Yeah, and I think the other piece too is, so like they definitely, one, prevented ownership of gold, they confiscated it, all that kind of stuff. But that was really, I think, a U.S. solvency type issue where we were on the gold-backed standard and the U.S. held a lot of gold, right? And so it was kind of a way for the U.S. to benefit at the expense of the citizens. And so if the U.S. like somehow held a bunch of gold of Bitcoin, and there was some issue and they wanted to essentially get Bitcoin, I could see them doing something like that. We've actually seen that. I think it's in Iran. Iran went through a process of, they basically gave out permits to miners to use state resources on the energy side to mine Bitcoin. And then like 6 months later, they're like, oh yeah, by the way, here's another piece of legislation. Like after you mine the Bitcoin, you have to give it to us. Right. And like, we'll buy it from you, but like you're giving it to us. And so I think that there's some governments that'll do things like that. I just, again, it's hard for me to see a world where there's outright banning of ownership in the United States, just kind of given all of the things we talked about.
Well, maybe one time soon the Fed will go on the Bitcoin standard, given the at the rate they're pumping money into the system.
There's people who think that they're going to do it. I don't know if I'm convinced of that yet, but they're definitely creating a lot of money. That's for sure.
So I don't know how we've gotten this far into the conversation without talking about GameStop. Let's turn our attention to GameStop. It's been just an outrageous, crazy madness, mania. Pomp, GameStop, hodl or sell? Where do you stand on GameStop right now?
Yeah, so I don't invest in the public markets, but I've been fascinated watching it. I have no clue what happens in the short term on that specific stock. There's a lot of market dynamics. I think you could go in and look at some of the order books and try to understand, long, shorts, whatever. What I do think is kind of the big takeaway, though, is just retail investors historically have been kind of scoffed at, and people have basically said like, what do these idiots know anything? We're professional money managers, right? Or we're institutional investors. And what we've seen a couple of times now, right, is that the retail investors are actually smarter than they're giving credit for. Now, do you want to debate how smart are they? Whatever. But I think that they were right about Bitcoin. I think they were right about Tesla. I think they were right about GameStop, right, in terms of just like the short squeeze that was kind of drawn out. And so I do think what we're starting to see is almost a kind of the cream rising to the top, if you will. Like the smartest retail investors now have access to information and communication tools and access to markets. And so it wouldn't surprise me if we continue to see this trend happen. I don't know if it's always going to be short squeezes. I don't know if it's always going to be individual stocks, but like retail is just getting armed with a more level playing field. And I think that's naturally a good thing for markets.
is this just a moment of irrational exuberance? There's a lot of money in the system. Tech stocks are at all-time highs. People are bored at home trading stocks for free now that there are basically no commissions on all the brokerages. Is this just a moment in time where things got out of hand and it's going to change, or has something fundamental shifted about the way retail investing is going to be from now on?
Yeah, so let's look at GameStop first, and then we'll talk kind of more on a macro scale. But with GameStop, people have to understand Wall Street made a mistake, right? They got over leveraged in a short, and a retail investor recognized the mistake. So if you kind of think of it as, people make an argument for short sellers. They say, hey, the short sellers keep the bulls honest, right? And we need short sellers in a market in order to create a more efficient market. And so in some weird way, retail in this situation served as a check on Wall Street's work. And so Wall Street got over leveraged, got in a very kind of high risk situation. Retail recognized it and they exploited it. And so, I tweeted the other day and said that, I think that's the duty and responsibility of market participants, is to capitalize on opportunities when they see it. That's what makes the market. Now, there is this element of, once that mistake was recognized and the initial kind of, hey, let's go short squeeze them, and that momentum started, it almost felt like, there was momentum from the internet because they realized, oh my God, we found a mistake, and let's not just exploit it, let's bring them to their knees. And then you got here comes, not only more retail investors, but then also you've got all of the hedge funds that are momentum trading, front running trades on Robinhood. Then you had the institutional money behind that movement. And so in this one situation, I think it's just there was a mistake, somebody found it and exploited it, and that created this moment on the internet. The internet did its thing. Now, I actually think that the kind of macro analysis on it is just the cost of accessing markets has dropped so significantly that even if you could identify the problem in the past, it was still difficult to actually go exploit it. So forget for a second whether people have gotten smarter or not, better information, better communication, just the access to markets. And so I think that what we're going to see is Robinhood was kind of the stepping stone to eventually this decentralized digital financial system where you don't have the intermediary. You have kind of a truly decentralized system on these open protocols. And there's 24/7, 365 trading, and you get much more into this global financial system rather than right now. I think what we have is more of a Western financial system that just is accessed by people globally. And so when all that stuff happens, you're just giving accessibility to everybody. And ultimately, I think what the internet's proven to us in other forms is the more access you give to the human population, the better off we are as a species. Now, how that plays out, which platform wins, what protocol, all that's up for debate. But I think just this is a very positive step over kind of a long time horizon. And people have to understand that Robinhood is probably not the end game. It's actually just a stepping stone towards, something that looks very, very different than where we started 10, 20 years ago.
Now, I've got to ask, because you mentioned Robinhood, and there is so much animus now against Robinhood among some people. Is Robinhood for the people or against the people?
I think that the binary questions like that are so hard to answer, right? So I don't know the founders. I have no clue what their actual intentions are, good or bad. What I do think is Robinhood started out with a very specific mission, was to create more accessible markets. They accomplished that, obviously, and have kind of been growing quickly. What I think is the big question now, they're probably actually growing faster than they ever were, right? Rather than going to zero. Everyone's oh, Robinhood's over. I actually bet that they've gained more users, they have more volume, and it's been this great marketing campaign, kind of the Streisand effect, if you will. The big question is, where else do people go, right? And so if there was 10 other competitors that were kind of feature parity and just as popular, sure, people would kind of move from Robinhood somewhere else. There's just not that many other options. It's not like people are going to leave Robinhood, go to Charles Schwab, right? That's such a big difference. And so I think that in some weird way, Robinhood is going to benefit from this. And the other piece of it is, did people really believe that they were for the people at any point? Or did it feel good because the interface was nice and the messaging was cool, but people always kind of in the back of their head was like, this is a company and they're going to do what's in the best interest of the company. I don't know, but I just don't think that there's going to be as much of a negative impact on the company as people think. And it wouldn't surprise me at all if we find out, 3 months from now that their user base doubled or something like that during all of this.
I absolutely agree with you. And just anecdotally from my own personal experience, anyone in my household who wasn't using Robinhood beforehand downloaded Robinhood in the midst of this mania.
Yeah. And look, part of it too is I think that I don't have thoughts fully fleshed out on this, but it does feel like there's an entertainment angle to all of this. Like you read some of the forums and there's definitely irrational actors, right? Or non-economic actors who are saying things like, I bought GameStop. I want to bring the financial system to its knees. I'm going to hold. I don't care if I lose all the money. Like it's bigger than that. So you have like those kind of Luddite type, arguments. But on the other side, like I got a number of friends who texted me and they were like, I YOLO longed in GameStop just because I want to be part of the madness, right? And it's like, okay, so like, even if it's $100, like you're not doing it because you think you're going to like retire. You're doing it because you basically want to be part of it. You want to have the entertainment. You want to be paying attention, feel like you've got skin in the game. And so when you get this like gamification or entertainment angle to markets, it does take what used to be or people thought was 100% economic rational actors. You now add some irrationality into it. And so when that happens, how do markets change? I'm not sure yet, but I do think that that's like a thread worth paying attention to as this continues.
It is certainly fun to watch, and it is extremely entertaining. Wall Street Bets is a riot, and I hope people don't get too hurt as a result of all that's going on.
They have more. When I looked, I think it was yesterday or the day before. I think the Bitcoin Reddit subreddit has like 2 million or just over 2 million Redditors. The Wall Street Bets had 5. Wow. And so it's like, it's bigger than the Bitcoin subreddit now, and it's growing, obviously incredibly fast. And so it just becomes this thing of like, the internet's going to do its thing. Like there's a movement, people flock to it, whether they should or not, they're going to. And so it's just interesting to watch.
It's super interesting. Actually, one thing I thought was super interesting too about it is, these other sort of ancillary stocks that Redditors have been jumping into. And in fact, one thing they've been looking at is silver, of all things. And it started making me think. People call Bitcoin digital gold. It's starting to gain a lot of traction as this sort of scarce inflationary hedge, store of value over time. It makes me wonder, is there going to be a zero-sum game between precious metals and cryptocurrencies like Bitcoin?
Yeah, I think that, so if you just look at Bitcoin and gold, right? I think Bitcoiners and gold bugs all agree on the problems in the system. I actually think they agree on the solution, which is sound money principles. The gold community just thinks that the analog application, right, the physical gold, is the solution. And Bitcoiners believe the digital application of sound money principles, or Bitcoin, is the solution. And so it's kind of this nuance. I think it's somewhat generational, but I do think that there's more similarities than differences. What I think that people are constantly forgetting is that whenever you have an analog asset or business or really anything, and you digitize it, the digital version is almost always bigger than the analog version. And so if you think of just sound money principles, we have an analog application. Once we get a digital one, the digital one will be bigger than the analog one, right? I fully believe that. And so the question becomes not like, will that happen? It's when will it happen? And in my head, I kind of have like a 10-year time horizon, right? It's kind of like, we're at $600-700 billion in the Bitcoin market cap. You've got about 10 trillion, give or take, in the gold market cap. And so it feels like that could flip, or Bitcoin could eclipse gold by the end of kind of this decade. But I think that the bigger question and kind of what you're getting at is like, is that because the gold market cap shrinks and capital flows out of gold into Bitcoin? Or is that a coexistence scenario where just no Bitcoin grows and gold kind of stays the same? I don't think that you're going to see massive shrinkage of the gold market cap. Like, I don't think you see it go from 10 trillion to 1 trillion. Maybe you get a little bit of movement where it contracts and some money flows out of gold into Bitcoin. But I think it's much more a growth story for Bitcoin than it is like a kind of a shrinking story of gold. And I think that's healthy, right? You basically have an entire generation of people, maybe 35, 40 years old and younger, who are growing up. They grew up with cell phones in their hand. They kind of are digitally native. And they're just not used to, and the concept is foreign to them of like, I'm going to go get physical gold and like put it in a safe in my house, right? They're just like, wait, what? Like, I just put everything on my phone. Like, why can't I just put it on my phone? And so I think that that's like the big change is there's been a psychological and cultural shift. And so naturally it just takes time, but eventually I do think Bitcoin will eclipse gold. And, you know, I could even see it being, you know, $20+ trillion by the end of this decade.
What would that put the price per Bitcoin at?
Yeah, so if it hits 20, it's about $1 million per Bitcoin. And I think that, you know, when that happens is again up for debate. But I do think that, you know, we're going to see kind of more to this bull market in 2021. There's likely to be some sort of market stabilization or correction at some point. Is that an 80% drawdown again? I have no clue. We'll see. But I think that just if you kind of draw the line from today, 10 years out, up and to the right is the, you know, directional trend with lots and lots of volatility along the way. And so if, you know, you kind of are a long-term investor, then you'll do pretty well. If you're day trading, you know, good luck to you. That's not my skill set, so I can't help you there.
Are you expecting a drawdown? You know, so many aspects of this bull run feel differently than past ones. You know, whereas in 2017 there was the ICO phenomenon, people were just trying to get rich quick. Now you actually have companies like PayPal letting you buy and sell Bitcoin, Square converting their treasury into it. It seems like there are so many things, you know, puffing up the sales of Bitcoin. You know, the wind at its back. Yeah, it makes me wonder.
I don't know, right? Is kind of the short answer. The way that I think about it is how big of a drawdown is there is really dependent on how overheated does the market get, right? If you kind of think of, let's say that we all agreed, which nobody agrees, but let's just say we all agreed that Bitcoin's value was $100,000, right? And that's what the price should be. And it goes to $110,000. Well, that's not really that overheated, right? You're kind of like, we'll see what happens. And so I would expect a small drawdown. If Bitcoin goes to $250,000 or $300,000, and we all agree that the value is $100,000, well, yeah, you're going to naturally get kind of a reversion to the mean, right, if you will, or a reversion back down. And so then you'd have this big drawdown. And so I think a lot of it is just how high do we go in the bull market really depends on how deep is that drawdown. And so we don't have all the information yet, so it's hard to kind of really understand that at the moment.
Even though Bitcoin sort of started as a retail investing phenomenon, and it went from the niche into more of the mainstream, and it continues to get more mainstream all the time, there are a lot of people still sitting on the sidelines, though, saying, man, I wish I had bought in earlier. I still haven't gotten involved. The price is so high now. I missed my chance. And they sit back and they do nothing. What should those average Joe and Jill investors be doing right now?
Yeah, it's hard to tell. Kind of everyone's so different. The two principles that I do think are important, or three really. It's like one is you should just educate yourself, right? Like don't touch a single thing in the financial world unless you understand it. And I think that just spending the time to really learn about it, whether you end up concluding that you should own this or not, the educational kind of path is valuable. The second thing I think is identifying, is this a speculative thing? Do I want to day trade this and try to like make money and convert it back to dollars? Or do I buy into the narrative similar to what I've done, which is I'm going to denominate a portion or all of my wealth in Bitcoin, right? And so it's more of a store of value. It's something I'm not going to touch for a long time. And so I'm going to just kind of buy it and leave it. Once you decide those two things, that helps you determine like the sizing in the portfolio. So if you say, hey, look, I just want to day trade it, and this is like the riskiest thing I'm going to do, well, you might only put 1%, 2%. If you say, no, actually, I want to protect the purchasing power of a good portion of my portfolio, maybe it's 20% or whatever it ends up being. That gets you the sizing. And then the third thing is just dollar cost average, right? Like I don't know where the price is going. I have opinions, but like I actually don't know where it's going. And so if you had bought Bitcoin in a one-time purchase in December of 2017 and you held till today, you're up, on that purchase in US dollar terms, about 50%, give or take, maybe a little bit more. If you instead said, hey, I'm going to make the first purchase in December of 2017 at $20,000, and then every week or every month, I'm going to buy the same amount, and I'm going to kind of dollar cost average in over the next 4 years, you actually are up like hundreds of percent, right? Because you ended up just over time buying some at 20,000, then you bought some at 10, then you bought some at 3, then you bought more at 10 and 20 and 30. And so I think that the dollar cost average strategy, that is a timeless strategy for people because it works. And so if you simply just say, look, I'm going to try to protect the purchasing power of a portion of my portfolio, I'm going to hold it for a long period of time, just dollar cost average in, and then kind of just set it, forget it. And, I think you'll end up being happy over a really long time horizon.
Do you dollar cost average? And are you kind of in the midst of this price run up? Are you taking any money off the table? Are you rebalancing at all? How are you approaching this personally?
I haven't sold Bitcoin in a very long time. I've got to think definitely since 2018, I think maybe was the last time I sold Bitcoin. I have no plans to sell Bitcoin. I constantly am buying more. Sometimes, big purchases, sometimes small purchases, but just, I really think of it as a game of accumulation, right? It's how do I take dollars that's sitting in the bank and convert it into a thing that will protect my purchasing power from an asset that will destroy my purchasing power, right? So it's very much kind of a conversion for me. And then in my mind, when I buy it, it's now sitting in Bitcoin. I denominated it in Bitcoin, and I'm not coming out of Bitcoin for any reason. And so I think that, that's a mentality or a psychological shift that I had that's been very helpful, obviously. But I do think that it goes back to the education, right? Like, what is this asset? Why is it important? And how do I personally think about it, right? Some people just say, hey, look, I don't care at all about the qualitative argument. All I care about is this thing's super volatile. It trades 24/7, 365. I'm a degenerate gambler, and I want to go trade. Sure, it's probably a great asset for that too. That's just not kind of how I think of it in my portfolio.
So we are running out of time. I want to squeeze in just a few more questions very quickly. One regarding the Biden administration. Janet Yellen's been tapped as the Treasury Secretary. She said some worrying things about crypto in her confirmation hearing about it being used for money laundering. Are you, on the whole, excited for the Biden administration with respect to digital currencies, or do you think that this is going to be a difficult time moving forward?
Yeah. When it comes to politics, I always think there's, pros and cons to every administration, right? Regardless of which side of the aisle they come from. When you look at this specific administration and the team that they're putting together, I think a lot of attention has gone to Gary Gensler, who's coming in to run the SEC. He's been pretty pro Bitcoin and blockchain. Janet Yellen hasn't necessarily, until that confirmation hearing, really talked too much about any of this. She did clarify the comments later on and say, hey, maybe we should actually embrace this stuff. We should look at the positives and the potential negatives. I think the data pretty much disproves any sort of argument around this is only used for nefarious purposes. The chain analysis study that shows only 0.4% of transactions are actually used for illicit purposes. But to me, the bigger story and the most important thing to watch is just Janet Yellen is notorious for believing that it is okay to have a weak dollar, higher levels of inflation in order to address unemployment. She is coming into a position of power and influence at a time where we have higher levels of unemployment. She is talking a big talk in terms of we got to go big. We really got to rely on the government for a lot of stimulus and help for the average person. And so I think that we're going to see quite a lot of government intervention, quite a lot of monetary policy, manipulation and just help that will provide a tailwind for Bitcoin. And so it wouldn't surprise me at all to see that the administration on a net basis ends up being a very good positive for all assets, but then obviously Bitcoin being one of the biggest kind of winners in that bucket.
So turning attention to you personally, you've managed to build a very popular podcast. You're going it alone as what you call a solo capitalist with your own new investment fund, which is tethered to your name and the bets that you're making. I'm just wondering, what top tip do you have for anybody who's kind of looking to build a brand themselves?
think it's just consistency. Like whatever you want to do, just being consistent for a long period of time. And so actually when people ask me like, hey, what's the number one thing you tell people who want to start doing this? I say, don't, right? Because the people forget just like it's day in, it's day out for years. And if you like doing that, if you want to do that, then sure, like, go do it and you'll be successful. But if you're a person who says, hey, I enjoy writing sporadically, or I enjoy doing things in kind of spurts where I want to do a lot in 1 week and then not do anything for 4 weeks, it's just really hard to kind of build an audience across any of the mediums. I think it really just comes down to consistency over a long period of time. And so, while that's not a super secret in any way, I do think it's the most important thing.
So it's sort of the dollar cost averaging approach to managing your own media output and reputation.
It's compounding, right? It's just every day when you write or you release a podcast or you tweet or whatever the medium is that you want, you're essentially just compounding a bigger audience, more loyalty, right? Kind of more habitual reinforcement with that audience. And so I think a lot of it in terms of consistency over long periods of time. And then it is accelerated by the frequency on a per month, per week, per day basis, right? And so if I write once a week and I'm consistently doing that for years, I'll build an audience. But if I then do it twice a week, I'll build a bigger audience, right? Because it's just the compounding effect. It's almost like if you had a savings account, right? You'll end up making more money if you're contributing every day versus once a year or once a month. And so, just let compounding work for you.
That makes sense to me. And finally, you've said that you expect Bitcoin to hit 100,000 by the end of 2021, given recent events and just how the past few months have gone. Is that still your price target?
Yeah. And when I think I wrote that in 2019 and everyone thought I was crazy. Somehow now I'm the most conservative guy in the room because people think it's going to 200, 300, whatever these crazy numbers are. We'll see what happens, but I still think we're on track. And at 100K, I feel good about just staying there. I don't think I want to move in either direction. So 100K by the end of 2021 feels like that should happen.
Well, people were shooting for the moon before, but now that Elon Musk is on board, they're shooting for Mars. So, Pom, thank you so much for your time. It's been a delight having you and interviewing you. I hope that everybody in the audience has gotten something from this conversation. Thank you for tuning in.
Absolutely. Listen, thank you so much. I really appreciate it, Robert, and hope everyone has a great day.
All right.
Skale is natively connected to Ethereum and the entire Ethereum ecosystem. Skale is built to power the generational leap in blockchain adoption. dApps built on Ethereum plus Skale will provide a frictionless experience along with high speed, openness, global reach, security, and privacy, all while staying truly decentralized.
Wow. Thank you again, Anthony and Robert, for such an interesting conversation. Looks like Mars it is. Sarah?
Yeah, great to hear such not just global but interplanetary viewpoints there. Now we're down to our last session of the day, and my, has that flown by. So our final session, please welcome Daniel Dye from our sponsor at AWS.
Hi everyone, I'm Dan Gongjiu, came from AWS. I'm an IBD for financial industry. I came here to congratulate on the opening of the Binance Blockchain Week event, and it's an honor to participate in it. Finance has always been the lubricant of social development. Without financial services, the resource of the whole society cannot be effectively allocated. In the modern era of digital living, financial services are also fully digital. When Keynesian difficulties, Hayek shows a strong vitality. Cryptocurrencies are the concrete practice of the Hikson can land. At the same time, AWS is one of the fastest digital transformation company in the world and has been recommended by the Gartner as template for digital transformation. AWS has a rapid backbone network around the world with 24 regions and 77 availability zones on all the continents except Antarctica. Availability zones are twice as large as the world's second largest cloud service provider. AWS global infrastructure capabilities provide a solid foundation for digital currency life. AWS is the world's most customer-obsessed company, and the AWS corporate culture provides best building tools for builders. AWS is the world's fastest iteration company with 15 billion iterations of company-wide products by 2020, more than 6 iterations per second, and nearly 2,500 features released each year make AWS a company willing to constantly revolutionize its own products. Cloud computing is more of production revolution than a technology, and the definition of cloud computing should be based on economic models, not technology. AWS make IT build services readily available and can scale rapidly around the world, which was previously unthinkable. Our lighthouse customers, such as startup company Boom, a supersonic airplane company, have transformed the world's business model by bringing together millions of CPU cores from the AWS in 4 hours to perform simulate wind tunnel calculations and assist in the pneumatic design of aircraft. Like cloud computing, digital currency is also disruptive business, not from technology itself, but from the unprecedented economic and monetary models behind it. Digital currencies must be a future trend, and this trend is unstoppable. So visit aws.com to build your own digital life at any time, anywhere. The best way to usher in this new era is embrace the storm of cloud computing and digital currencies, and enjoy the dividends of future economic models. Let's build on together.
Well, friends, that brings us to the end of day 2 of Binance Blockchain Week. We'll be streaming live on a daily basis from now till Friday, so catch us again tomorrow, same time, 10 a.m. UTC, for new sessions on the decentralized future.
Absolutely. Tomorrow will be a great day. DeFi is the fastest growing segment in the crypto space right now. So thank you to our sponsors Dodo, Chromia, Frontier, EasyFi.network, Amazon Web Services, Stratus, Scale Network, and Ocean Protocol. We'll see you tomorrow for Blockchain Week Day 3, Decentralized Future.
Bye-bye.
Bye.